Good morning, everybody. Welcome back to another episode of the Market Open. It is a Wednesday, September 24th. We are live, and we have a ton to talk about in the global capital equity markets. Folks, we got a bunch of headlines, a lot of stuff from yesterday. Really after hours, we had a ton of breaking news around Openai, Oracle, data center expansion. That is why I think you're seeing a green pre-market right now, which again, we've got a couple days left of September. This is supposed to be the worst week of September on average, and maybe it ends up being the worst week in the next couple days. But even the slight sell-off we had yesterday, which we'll talk about why that happened, you're seeing a rebound in the pre-markets. And I think it's based on the resiliency of this market. I think it's based on the overall CapEx spend that the market sees is simply not slowing down. And I think it's also based on the idea that there is a lot of money on the sidelines that wants to make its way into this market. And any little opportunity, any little dip that the market gets, like we did yesterday with a 0.5% sell-off on the S&P 500, that would create a buying opportunity. So we got a lot to talk about. We'll get into it. We got Bessent. He's been live this morning on Fox. We'll get some of his comments. TLDR, pretty bullish. He wants rates to come down pretty soon, and whoever the next Fed chair is going to be likely is going to help get those rates to come down. And then we have some headlines around a variety of different companies that got some upgrades this morning. We'll talk about Micron earnings, and we'll keep going from there. And we'll try to see how this market ultimately turns out for the last couple days of September as we enter into October. And so we'll get through all of that. Thank you, everybody, for being here. Good morning, good morning, good morning. I did do it for those that are asking. I know that it's been on your mind for the past 24 hours. Everyone's wondering, did I do it? I actually did it, okay? I watched the stupid movie last night. All I can say is I don't know how that movie could ever be in anyone's, forget top 5, forget top 10, forget top 12. How is that even a top 100 movie of all time? I don't get it. I'm not going to say the name of the movie because you guys already know what movie it is, and I don't need to be clipped saying bad things about that movie for, you know, the reasons that are that you know some people may know about. But whatever movie that you guys told me to watch and I watched, it's not top 5, dude. It's not top 10. It's not top 15. Not top 20. Freaking Steve had to call me 40 minutes into watching the movie to figure out if I was even awake. I was like, bro, I'm awake, but this is like torture. This is literally torture. I can think of a billion movies, literally 1 billion movies that are better than that movie. It was not good, dude. It was not good. I'm sorry. I'd rather stick to Chris Tucker movies. Dude, if anyone tells me High School Musical is not better than that movie, you're smoking something, because there's plenty of reasons why I could say High School Musical, which gets a lot of shit from everybody, is way better than whatever the hell I watched last night, dude. It was so bad. Like, it was 2 hours of my life wasted. Completely wasted. I didn't like it. I didn't like it. It just wasn't my thing. You've seen like 5 movies. Well, now I've seen 6, and that one, I wish I only have seen 5 my whole life. That one was not the best movie. So it is what it is. At least I watched it, so no one can say I haven't watched it anymore. But in terms of the qualitative elements of that movie actually exciting my soul, my overall ethos when it comes to consuming content in the form of movies, it was just not good. It just wasn't good. So I'm not going to say the name of it because we don't need to talk about names, but I'll just say it wasn't the best movie. All right, so that's what we got. Let's get into some of the other stuff we got going on. Again, thank you, everybody, for being here. I don't think we have any earnings after the bell. We do get money market inflows tomorrow, which is going to be really important given we did get some rate cuts. Costco earnings are also tomorrow, so we'll take a look at that. But today, relatively light on some of the macro data. We do get some housing data, I believe, later today. We got PMI yesterday. But outside of that, nothing too crazy in terms of earnings. So let's get started. I mean, this is the biggest update of yesterday, and it's continuing to allow stocks to, I think, gain some momentum in the pre-markets. Openai is officially expanding the Stargate project with 5 new U.S. data center sites in partnership with Oracle and SoftBank. This builds on the initial $500 billion commitment over 4 years aimed at securing U.S. leadership in AI. Look, this one was really important because this was not just one of those announcements that is like, oh, NVIDIA is investing $100 billion eventually, and that $100 billion will come back to NVIDIA. And, people could, theorize what they want about that NVIDIA partnership that we got a couple days ago, which I think was still really bullish. This was a legit argument from Oracle saying, hey, in New Mexico and Texas and a site in the Midwest, we are officially building out data centers. And, data centers are not the most exciting things to look at. They're just plots of land where you're ultimately storing a ton of GPUs and trying to create value from in the context of infrastructure for compute. But that's what's being done. And even to the point where they released a video right here, as per Sam Altman, showing the data center build out. So every single major tech company in the world is building this out. Meta has tons of these. Google has tons of these. Amazon has tons of these. But OpenAI is the one that's ready to spend as much as possible. And as a result of them spending this much, that is obviously very bullish for the broader market. Now, what's also really important about the progress on data centers and how quickly it's expanding is because Sam Altman put out a blog post yesterday that I think we covered on the Market Open for those that weren't near the end of the show. Dude's talking about he wants a gigawatt of data center factories to be created every week. Now, obviously, that's likely impossible for the time being, but it goes to show the ambition, like the raw ambition that Sam Altman has on how much compute and data center infrastructure they can build. And the sort of number one reason for that, the logic behind that, is simply because he thinks that AI will affect every single part of our lives. And if it's going to affect every single part of our lives, then we need to build as much as possible. He says if AI stays on the trajectory that we think it will, then amazing things will be possible. Maybe with 10 gigawatts of compute, AI can figure out how to cure cancer. Or with 10 gigawatts of compute, AI can figure out how to provide customized tutoring to every student on Earth. If we are limited by compute, we'll have to choose which one to prioritize. No one wants to make that choice, so let's go build. It's a very ambitious way to philosophically think about the trajectory of AI. And if compute is the constraint, then all of the data center plays, whether it's an IREN, a Cypher, a Bitfarms, obviously an NVIDIA, AMD, Broadcom, SMC, all these companies that are out there, it looks like they are going to still have more momentum if that is the constraint. And that constraint is hopefully not going to be constrained in the future, which means a lot of companies are going to be helping power that revolution that is taking place. IREN right here, that's up about 3.2% in the pre-markets. Bitfarms, that is up about 1.17%. Cypher was up 15% after hours. That's up 4%. Cypher rumored to be in the deal with Oracle and OpenAI. No confirmation on that, but just even the rumors themselves are getting people excited for some of these smaller names that likely will play somewhat of a role in this data center world. So that's what we've got going on. And it is obviously very, very exciting to see. Now, Toby makes a good point right here that says, hey, data centers are driving up local electricity prices, and that's not doing the best for people that are in those areas that have to obviously pay electricity prices. In New Jersey alone, I was looking at some stats last night, electricity prices are 7% higher than what they were last year. And there's a governor race that is currently taking place in New Jersey, and that's one of the main issues that the governors are talking about. I think the only way to solve that is for us to have more efficient ways of energy, right? Like if we're going to have data centers taking up this much energy in every single state of the United States of America, it's likely going to be many, many countries across the world, we're going to need new forms of energy. And this is why you get an Oklo that is now worth $20 billion. Now, am I buying this at $20 billion after it's up from 6 to 140? No. But can I understand why the street or retail at least thinks the growth is being pulled forward because there's going to be so much demand that, yes, you're allowed to pull forward that growth by a couple of years? Yeah, I can see it. I'm not willing to take that risk, but I understand why an Oklo, an SMR, a Nano Nuclear, a Bloom Energy, et cetera, VST, VRT are getting this type of momentum. Energy is going to be the bottleneck. Compute is the constraint. If we can solve those issues, there's obviously some pretty sophisticated investment opportunities, in my opinion, to be able to try to resolve that over the next decade. But also, there is a massive opportunity to fundamentally change the way we live. And I think that's what Sam Altman is speaking to as well. Yeah, UUU Energy Fuels, this one, it was up like 14% yesterday. It's up another 4% on the day. Now, again, if there's no actual need for all this energy, a lot of this pull forward of demand for all the energy names is going to be BS. But given everything we're seeing and the amount of investments that's going on across the entire world with data centers, it looks like we're going to need more energy, and it's not stopping anytime soon. And as a result, there's obviously a lot of momentum there, and that's getting the street excited. So that was the big announcement yesterday. OpenAI officially expanding the Stargate project with 5 new U.S. data center sites in partnership with Oracle and SoftBank. And it looks like they are officially beginning. Also, one last quick thing on this. They did say they are ahead of what they said. So in January, they made this announcement in the White House. And they said, we are now ahead of the 10 gigawatt commitment we announced in January based on starting officially yesterday by expanding these data center sites at 5 new areas. And it looks like they are going to keep expanding as fast as they can. Now, another company that is getting some momentum is Alibaba in the pre-markets. Cathie Wood bought Alibaba for the first time in 4 years, so she's back in the name. 177, that's up 8.5%. Why is Alibaba up? Well, they announced a ton more investments or commitments to invest in CapEx and AI. So two things. Number one, they announced a collaboration with NVIDIA on physical AI covering data synthesis, model training, simulation reinforcement learning, and model verification. This was at the conference that they had this morning. And then second, they announced a next-gen AI roadmap with 4 trillion yuan of investments, 52 billion of AI infrastructure over 3 years, and 560 billion over the next 4 years. They have not made the investments. They are committing to these investments. So the street's kind of valuing the commitment of these investments as the reason for why the stock is going higher. They are launching Qwen 3 Max, their largest LLM, exceeding 1 trillion parameters. And this is now a strategic pivot towards the coming era of artificial superintelligence, which is what Alibaba laid out this morning as they put out this announcement. I mean, you're getting a lot of momentum. You're getting a lot of momentum again on these names, which is very, very exciting. Now, again, BABA has the CCP risk that's been there for a long time. The stock was at 69 bucks. I think actually below that, it was at 54 back in September 2024. Yeah, roundabout September 2024, it was in the 50s. Then it bumped up to the 80s, came all the way back down to 85, or it got to the 110s, then came to 85, then got to 140, came all the way down to 95 in April. And even since 95, it's basically up double from 95 to 176. The reason I think this is so exciting is because investors are ignoring the CCP risk. We've seen this with Baidu and JD that have all had monster months. I think Baidu is up for the past month almost 30% because of the advents of AI. Yeah, 36% for Baidu. So the culmination of these AI investments, the excitement around the progress of ROI from AI across the entire world is leading investors to be like, you know what? I don't have to be that afraid of the CCP because this AI thing is transcendent above traditional geopolitical risks. And that is what's leading to also more momentum in the pre-markets for some of these names. It's pretty incredible. It is pretty incredible. I know the number one question on all of our minds is, hey, like, is this real? Is this serious? Is it too good to be true? Is this bubbly? And like, yes, those are legitimate, real questions. And I think we will try to answer those questions every single morning. But at its core, these are real investments that are being made. This is real money that's being deployed. And we are beginning to see a real ROI. Now, we've got to see a pretty massive ROI over the next 5 years. Bain estimates, they put out a study yesterday, we need to see about $2 trillion of annual revenue from AI by 2030. Right now, they're estimating it to be 800 billion. So they're saying, hey, in the next 5 years, this thing needs to get a lot higher for it to justify the CapEx spend. But the market's pricing in that CapEx spend in leading to that ROI. And if you don't get that ROI, maybe this all falls apart. If you do, then maybe it gets very exciting and obviously creates one of the best investing opportunities for a long time. So we are going to see. I am not in the Chinese companies. I do agree there is risk, but investors so far are willing to overlook a lot of that. And to be fair, you know, when BABA was like 50 bucks, that's when, you know, one could argue a lot of it was de-risked. Now at 177, maybe it's not as de-risked. But if you wrote it since then, even if you got in at 100, you've done very well. And so from that perspective, it's not the worst in the world for these Chinese stocks. Now, another name that is booming is Lithium Americas. This is up 67% in the pre-markets. Why? Because Donnie T is running the balance sheet of the United States like a VC fund, and he is asking for 10% of Lithium Americas. He already has about 9% or 8.5% stake in Intel. That stake is up 35%, by the way. NVIDIA and AMD have committed to giving him 15% of their sales from China chips, and now Lithium Americas potentially is going to be getting a stake by the United States government. I mean, look, you either hate this or you either love this. Trump's argument is, hey, all these companies got, including Intel, got massive grants from the CHIP Act. And I mean, Trump does have a point when he said Intel just fired 50,000 people over the past 3 years. So it's like, I think the Biden administration gave them $8 billion and they took that money and then fired employees. Like, it does make sense to be like, hey, why are we giving you all this money if you're not even going to employ people? And so, I mean, from that perspective, I can understand, especially from a national security chip perspective, why they want to have some stake. But with Lithium Americas, and lithium is very important for everything that we do, it seems like they are targeting as many industries as possible to secure equity stakes to be able to participate in the upside, which we have not seen from the United States for a while. I mean, obviously we saw this back in the 50s and 60s, but we're not seeing it as easily in the modern like 3 decades. And that's what's happening right now. Also, the Pentagon took a stake in Material Corporation, right? So another part of the government, and that one's up about 1.54%. Yeah, it'll only be worth like $2 billion. It's not a massive amount of money, but at the end of the day, you either love it or hate it that the U.S. is taking some of these equity stakes. It's not going to be a voting seat, so it's going to be more of a passive stake. So, I mean, we're going to see. if it were to happen to like Meta, Google, Amazon, I think then people would have but like for these smaller companies that are playing a role in national security with lithium, rare earth minerals, Intel's chips, one could argue they do play a pretty big role. Maybe it's not the worst thing in the world. But that is what we have on Lithium Americas. What is the copper play your uncle is in? He is in COPX. And he's going to get mad at me because I forgot to get Jason's thoughts on this. So I'm going to have to, we did like 50 tickers yesterday. This is the one ticker my uncle wanted and I forgot to ask it. So I'm going to have to ask Jason later. But COPX copper ETF, it's up 40% year to date. This is the one that my uncle is more into. And simply based on the thesis that commodities are soaring and that copper might be one of the next main coppers to do well. So that's what we got there. All right. I do have a new position in the portfolio. For those that didn't hear the news, I took a swing and I bought Amazon. 222.40 is my average. I bought 100 shares of this stock. And the reason for that is simply this picture. It's not that complicated. Amazon is the only Mag 7 year to date that is red. I don't know, bro. I mean, it's kind of just a gut feel. I mean, I did write up a long Twitter post around it. So, and I, Jason Calacanis responded to it. There was a decent amount of people that agreed with that Amazon thesis. And I could tell from the comments, like, I would say 5% of people think Amazon's there was actually people saying like Amazon's a scam. You would never invest. And then the 95% of people are like, yeah, Amazon probably does well over the long term. So 2 reasons I think it's down. Tariffs actually affect their commerce business, and we saw that with the operating margins going down for the first time in 5 quarters. It was a very slight deacceleration, but it was a decline, and I think that can be fixed. And then AWS is not as exciting as Azure or GCP's growth rates, which sounds ridiculous because AWS literally created the category of cloud computing. But analysts don't love that AWS isn't growing as fast. I think both of these things can easily be resolved, like simply, especially in the context of tariff guidance. Jassy probably has some creative ways to navigate that. But number 2, Semi-Analysis, Dylan Patel's boutique semiconductor consulting firm, said Anthropic could be one of the reasons why Amazon is going to accelerate AWS growth from 17.5% to 20%. And those extra 3 percentage points on a massive company or a massive sector of Amazon's business like AWS would be pretty aggressive. And Wells Fargo upgraded Amazon to 280 today based on the exact same argument. One of their main reasons was we are upgrading based on our conviction in AWS acceleration led by Anthropic. I believe Amazon has a $4 billion stake in Anthropic. So if Anthropic also does well, then Amazon does well long term if the company continues to execute. So, I mean, look, maybe I'm wrong. Maybe Amazon's going to 210. Honestly, DCAing into Amazon is the least scariest thing that I think I've done all year. Like NVIDIA was a little scary for me because I didn't know that much about semiconductors. And, I kind of was trusting Tanner's conviction and I was learning about it as well. But at the end of the day, at DeepSeek, I was like, all right, screw it. Let's just see what happens. Ended up working out. Amazon, I'm not that worried about. So look, the goal is to swing it to 260, but if it breaks 260, I think we're probably going higher. So realistically, this is probably more of a long-term investment. I'm not selling any covered calls on this. I think down 1% year to date doesn't last if the S&P can get up to 68, 6,900. So I think Amazon will be okay. I see a ton of you guys in the chat saying that, yes, you're long Amazon. Let's just make a poll in the chat and see what people are saying and get some thoughts on how many people are long Amazon. While I'm doing that, let's transition over to Bessent. He had a bunch of things to say on Fox this morning, and then we will keep going from there.
Be your best pick for chairman of the Fed at this point?
Marie, I'm interviewing 11 candidates. We've got a couple who have surprised me in the strength of their candidacy during the interviews.
Okay.
And
who surprised you?
I'm sorry. I'm not going to talk specifics.
So you don't want to break that news right now?
Maria, if I could, I would, because you're my favorite. But I'm going to be interviewing more candidates this week.
Do we really think that guy punched Elon in the face? He's a teddy bear, bro. Do we really think this guy's walking around punching people in the face? It's hard to believe that, dude. It's hard.
Expected the Fed's quiet period, and we didn't interview any sitting Federal Reserve board members or presidents. So there's going to be a lot of interviews next week. I think the first round will be done for first week of October. Then we'll start another round, and I look forward to being able to discuss it with President Trump, present him with 3 or 4 very strong candidates.
Do you think, given what we've seen in the labor market for the last 3 months, we've seen this weakening in the last 3 months. I don't know if you believe the numbers or not at this point, but do you think that tiptoes into recession at some point?
I am less concerned about a recession. I'm concerned about the distributional aspects that we've got going here. You know, I'm concerned that working Americans are getting hit harder just because of the high rates. I'm concerned that a lot of the housing affordability crisis is on the mortgage side. So, you know, I am very concerned, and I believe that we do need rate relief. We need to get at least back to neutral.
Isn't it odd that when you talk about lower rates and the Fed expected to cut another time, at least once more, that rates go up? I mean, do you think it's a certainty that as the Fed lowers rates, that you're actually going to see a real impact on, for example, mortgage rates?
I do believe that we are seeing. We'll see a substantial drop in inflation. I think that the housing numbers are done through imputed rent, that we're going to see, they run on about a 6-month lag. Everything that President Trump is doing in terms of deregulation, which I think is the third leg of his economic policies, you know, that's all disinflationary, and you know, we'll see what happens with this AI boom. You know, back when the railroads came in, we had this wonderful inflationary growth. At the end of the century, we had the same thing in the 1990s, and everyone asked me, what am I looking for when I interview potential Federal Reserve chairs? And it's just someone with an open mind. Someone with an open mind who's not looking in the rearview mirror, who's looking forward, who thinks maybe this could be like the 90s, where we saw the office electronics came in, we saw the internet boom. So could the AI boom be like that? Could we have a disinflationary period? You know, is R star, if it exists, going to move up or down? You know, what's NAIRU? So I want somebody who's looking forward, not backward.
I mean,
And he definitely wants to make sure that open mind is open to the potential of rate cuts. Now, Bessent went on to further say that Powell should have signaled 100 to 150 bips of cuts, not just 75. And he said that we are also getting into an easing cycle. So, I mean, look, these rates are coming down. Through hell or high water, these rates are coming down. Will that create some massive inflationary spiral? I don't know. We will deal with that when we get there. But I think it's really hard to deny what the administration is telling you right to your face. Just like, you know, quite frankly, when the administration said we are going to support crypto, and you had a lot of people that were still crypto skeptics, and then Trump himself launched a meme coin, which I thought was ridiculous, but still, it's hard to deny that. And that was the time to go max long crypto in whatever way that you played it, whether it was Coinbase, Robinhood, the BlackRock ETFs, whatever, Ethereum, obviously, now that has taken off. I mean, if they're telling us rates are coming down, we got to believe them. And whoever they're going to pick as a candidate is likely going to get these rates to come down, which is going to be very, very good for growth stocks. So the one thing that he says right there that I think is really important, and this could be the biggest surprise to all the bears in 2026 and 2027, is, hey, you know, these rates are coming down. The obvious answer from the bears is, okay, that's going to lead to a massive inflationary spiral, unless AI is so deflationary that the cost of goods come down so significantly. This is kind of Elon's theory of abundance when it comes to AI, that the inflationary spiral that everyone's worried about, this like 2% artificial target that the Fed has had for so long, and we've basically been at 3%. What if it actually comes down to 2%? What if it goes below 2% because of how productive AI makes the entire economy? Not to mention the fact that jobs are probably going to be lost via AI, which means there's going to be less overall demand, which will lead to more deflation. So there's a lot of different nuances to how we kind of play this out. And there's obviously a bear case to that as well. But maybe inflation is not going to be the biggest concern if we lower rates, which is the main argument by the bears. And if AI ends up counteracting that, then that thesis might not end up playing out in that way. So we're going to see what ends up happening. But Bessent obviously is very, very bullish, and it looks like these rates are probably coming down. Is that good for Open Door? So Open Door was down 15% after hours. Yes, I think rates coming down are good for Open Door. However, the major thing about Open Door is they have to fix their margins. Remember, 2021, these guys still couldn't make a profit and rates were zero. They did a lot of volume. The business model itself did not allow to make a profit. I don't know exactly how that's going to change, but I'm going to give management, you know, the time to try to figure it out, given they have a new CEO. But that is the major thing for Open Door. Now, one other update on Open Door is that one of the institutional investors that sold about $95 million worth of stock 2 days ago, yesterday after hours, he sold another $95 million worth of stock. So I think they have in total like something around 70 million shares. And over the past couple of days, they've sold about 30 million shares. They sold the first tranche at $8.38 and the second tranche at $7.09. So you do have the institutional guys, or at least some of the institutional guys that have been there for a very long time, liquidating their position. And now some may say that's a good thing, because at the end of the day, you're getting rid of a lot of the older investors that had a different mindset about Opendoor, and they're just getting out of the stock. But that obviously is creating some short-term issues for the stock, because when you have that many shares that are being dumped after hours, you need liquidity. And at the end of the day, retail is becoming that liquidity. Now, unfortunately, we have seen the pain of that liquidity in the context of retail, and you get some screenshots that are not the most exciting to see, unfortunately. And as much as I love Robinhood, these screenshots end up happening on Robinhood, which sucks. But you got this person right here who's begging for help on Wall Street Bets. As you can see, he bought 120,000 shares of Opendoor at $9.91, and he is now down $240,000. These screenshots are always surprising, because it's like, how does someone, first of all, have $1.2 million to just YOLO into a stock like this? Like, you would think you get to that type of wealth by like not taking those types of bets. I mean, obviously, yes, some people make that wealth by consistently degenning and taking bets, but also it's like, that's not the majority of people. But I guess on Wall Street Bets, that's the majority of people. You degen your way up to that wealth, and then you degen your way down to losing that money. And it just like, it's not even Opendoor itself. It's like the stock went from 50 cents to $9.91, and you're buying in to the tune of $1.2 million. Like, do people just think a 10x happens every other week? Like, this is the type of stuff that makes you think we're toppy. Having said that, Opendoor is only a $7 billion company. So it's toppy and it's frothy, but it's in one sector of the market. And unfortunately, this guy is down $240,000 and hopefully comes back, but it's not taking down the entire market, in my opinion, because it's not the biggest companies in the world. Now, the worst thing about this is that it's on Robinhood. And so that guy just lost $240,000, probably to Citadel or Jane Street. And they literally took those assets from Robinhood by seeing the stock go down, which is the sucky part about some of this stuff being traded on the platform. But nonetheless, this is kind of how some of these people trade. And you are seeing some of the weakness in those products. Is this an AI generated image? No, I've seen dude, if you scroll through Wall Street Bets, there's a ton of them. And if you just scroll through Twitter, dude, I was scrolling through Twitter last night on some of the Opendoor, but there's a lot of people that bought in at 9 to 10, unfortunately. Like, a lot of people. I mean, most people end up buying when it runs super hot, right? Because that's when FOMO is the highest. And congrats to you if you were not a victim of FOMO. I've not participated in the rally, not participated in the decline, because, trying to just become a little bit more mature and buy Amazon down 1% year to date, not some random stock that's up 10%, up 10x. But there's a decent amount of people that are really pissed off about this. And, we're going to see how this ends up playing out. But you do have a little bit of pain in some of those names. 30 and a Wake Up says, this market has spoiled a lot of folks. I've been investing since 1994, and every big bull market eventually has this time is different commentary. It never is. Yeah. And again, like, certain parts of this market obviously are frothy. We can all admit that. Now, is Nvidia frothy? No, because of a trillion different reasons that we can talk about that I think all of us are beginning to understand, and the whole data center build out, et cetera. The fact that, it's not trading at 7 trillion, it's at 4.5 trillion. And if you look at their EPS estimates at $8 a share by 2027, it's trading at 25 times. That is not that expensive. But then you get a company like an Opendoor, or, take whatever other pick of names that have really started to get momentum, and you can't really justify it. And so the question just becomes, can they survive and last? And ultimately, it's up to execution. And we're going to see what management can do. Yeah, Novo and PayPal, right? You got names like Oklo running, and then PayPal can barely get any momentum, even though in the next 7 years, they're going to buy back the entire company. Might as well go private. That's up about 1% right here. And then Novo, that has a bunch of other issues, but one could argue that Novo is definitely cheap. I mean, look, I think these are not horrible investments 5 years from now. It's just in the next 2 years, if there's this massive AI data center build out happening, do you want to be stuck in these names if the narrative on them is just not that exciting? I don't know. You're going to have to make that decision. But obviously, yeah, do I think they're cheaper than a lot of the other stocks? Yes. Question is, do they continue to be cheaper? Do they actually have a turnaround? You can't justify Palantir at 400 billion. Well, I've been very transparent about this, dude. Palantir, again, I've never said I couldn't justify Palantir at 200 billion quantitatively. But, and I know people hate to hear this, it's a unicorn. And I know people say, well, that's not the right. I get it. You can say that's a stupid, that's fine. But at some point, you kind of have to look back and be like, dude, this is a $420 billion company doing $4 billion in revenue. The numbers could never make sense of that outside of the fact that people simply believe in this company. And then, if we do want to get into the numbers, Their free cash flow margins are almost 60%. Top line revenue growth is 50%. They're actually one of the companies in AI that's leading to results. If they are able to keep up this growth for the next 10 years, or at least next 5 years, they will absolutely have a chance to grow into this valuation, along with new verticals they're expanding into. But at the current day, is it easy to justify 400? Of course not. But it is one of the names, along with a Hood. I mean, it's, there's a lot of ways that you can't justify 115 billion on Hood. But when you have generational unicorn companies that, yes, will go through pullbacks, they also get a premium. I mean, Tesla, it's hard to justify multiple trillions on Tesla as well. But again, these are three names that I think are very special, but they're not similar to the other names that are running where you can't say they're a unicorn. I mean, they're just maybe they're in a unicorn hype moment, but the companies themselves are not fundamentally rooted in such strong qualities that people could say, yeah, that's a unicorn company. I understand why it trades at a premium. And that's why I think some of those companies actually continue to trade where they trade. Yeah, it's one of a kind. You don't have to love that argument, but I think that argument is beginning to prove itself over the past couple of months. So that's what we got on some of that analysis around Bessent and rate cuts. All right, here's a couple of other macro things that are really important. So 2 things from Bank of America. Number 1, they say 45 billion of equities will be sold for quarter end rebalancing. The quarter is going to be ending in like 5 days. So that's one thing to watch out for. There's definitely different fund managers and different hedge funds that have to rebalance the funds that they are in, or the equities that they have their funds in. And so, someone might be up a lot on Palantir in one fund and might want to sell it off to buy something else, which would create a bit of a sell-off in Palantir. And you need buyers to subsidize that. So that is one thing to watch out from Bank of America in terms of $45 billion worth of equities likely will be sold in the coming days when it comes to a rebalance. The other thing they said, though, that was also really important is their note on Q4. Q4 is historically strong for stocks. Bank of America says Q4 is typically the best quarter for equities, with all major indices showing positive average returns. The S&P 500 has gained 3% on average, NASDAQ 6.2%, the Russell 2000 5%. Tech leads, rising 80% of the time, while energy and real estate lag. The Santa rally, as it's called, often drives December gains, while bonds and commodities follow seasonal trends. Yields fall into year-end, oil weakens, and precious metals strengthen. AKA sell oil, long bonds, and commodities likely continue to be green, silver, gold, and potentially copper, lithium, etc. And then tech is likely what's going to make up the majority of the performance. So if we do get a Santa Claus rally, which, look, for the past couple of years, we have gotten a pretty good Santa Claus rally. If that continues toward year end, it could be one of those Q4s that's very, very exciting for the markets. It could be one of those Q4s where if you're looking to make some stronger gains to raise cash, you might be able to sell some of these stocks at just a better level before you get into the January, February time. And it's also one of those parts of the year where if you're tax loss harvesting, maybe some of the names that you're down on don't end up being down as much as you head into December. So Q4 is going to be very, very important. The only thing that's going to accelerate the momentum in Q4, in my opinion, is Q3 earnings, because Q3 earnings start in Q4 in October. And so that kind of bleeds into the Santa Claus rally. If we have a strong earnings, then hopefully it's not too bad. And we should keep gaining a bit more momentum. You guys are still making fun of how I say strength, dude. I don't get how people think I'm saying it wrong. Like, it's strength. It's like I've been saying it like that for 27 years, bro. It's strength. I think you guys are wrong. I'm not wrong on this. I think you guys have been brainwashed by propaganda on the English language. It's just that it's that simple. The G is silent, bro. The G is freaking silent. I don't know what you want me to say, but it is silent. Micron, that is down 0.31%. Unfortunately, this one, they had a great quarter. They got upgraded to 220 this morning, but this one has just not been able to find its strength. Every time I say that word, I'm gonna become cautious. Or its momentum here. They beat on the top and the bottom line. They raised guidance. JP Morgan raised them to 220. The only kind of concern that some of the banks had today is that you can't fully estimate the supply constraints around memory storage. We know that there's going to be tons of demand for memory storage, but the level of supply could potentially lead to Micron having a little bit of a supply constraint or a supply chain bottleneck, which leads people to go to SK Hynix or other manufacturers, or other competitors, essentially Samsung, et cetera. And so that was only kind of like the concern. But outside of that, JP Morgan and Bank of America, they're pretty damn bullish on a company like Micron. The other thing about Micron that's important is that it was up 40% year to date going into the print, or actually month to date going into the print. Year to date, this thing is up 90%. For the past month, it was up 42%. So it was a good quarter. It just wasn't a blowout quarter. And I think that's why, it's not having a massive move in the pre-markets. But we'll see when the market opens if that ends up changing. Say length. That's how you say it, right? How to say length. That's how you say it. Length.
Length.
Okay. I see what's going on. The English language thinks that G is actually there. And I guess I'm the only person on the planet realizing that G is silent. I don't know what to tell you guys, but like stressing the G in a word like that is kind of ridiculous. I'm just like, honestly, I don't even that's not how you speak English. That's like, as an American, I was born here, by the way. I wasn't born in India. I was born in America. I think I am allowed to have an opinion on this. And so I'm just saying some G's are silent. And it is what it is. Trump is your speaking coach. Bro, someone sent me this video yesterday of Trump when he was trying to talk about Tylenol and he was trying to pronounce one of the drugs. They're like, yo, did Amit coach this guy? This was hilarious. This is me every single day.
Effective immediately, the FDA will be notifying physicians that the use of let's see how we say that. Acetaminophen. Is that okay? First,
dude, that's me every day. That's me every day. But it's like with simpler words. It's with like length and strength, not acetaminophen or however you say that. So it is what it is. It is what it is. All right, a couple more macro stats. We got 7 minutes until the market opens. Let's do a green or red poll and see what we got. 65% of you are long Amazon. Okay, so we have a decent amount of the chat that's riding Amazon to the end, and we're going to see how that plays out. Green or red day, what do we think? Green or red? A couple stats here that I think are really important. Take a look at this one. The last 2% drop on the S&P 500 was April 21st. April 21st was the last time we had a 2% drop on the S&P 500. Since then, you've had a myriad of different things that have happened. Moody's, credit rating agencies, bond auctions going the wrong way, IREN, Israel. I mean, you have so many different things. 50% tariffs on Europe that was announced. That was now rolled back because we got to deal with them. But nothing has taken the S&P 500 down 2% in the past 5 months, which makes you think, all right, we're due for a pullback. But what if it also means this is simply one of the most resilient markets of all time? And as a result, it's not that easy to get that pullback. Even yesterday, when we got 0.5% of a pullback, that ended up being bought, which is not that crazy. This chart right here, I also think is important. The bull market will turn 36 months old in a couple weeks, aka 3 years. Good reminder that the average bull market since World War II lasted 67 months. So on the most conservative end, you have about another 2 years left. I know some people think 5-10 years, but like at its core, you have 2 years left for the average bull market to kind of play out. And if it does play out in that way, then we do have a little bit more time before we start to see some weakness, historically, at least based on the average bull market. Now, the reason we sold off yesterday is because of these 30 seconds of what Jay Powell said. I mean, there's probably some other reasons, algos, but Jay Powell did say this yesterday, and this could have led to a little bit of a sell-off yesterday intraday.
We do look at overall financial conditions, and we ask ourselves whether our policies are affecting financial conditions in a way that is what we're trying to achieve. But you're right. It by many measures, for example, equity prices are fairly highly valued.
So that right there is, I think, Robin right there, 127.19. I think why we had a little bit of a sell-off yesterday when Jay Powell said equity prices are fairly highly valued. That's what got some of the algos to be, all right, it's time to sell off. In reality, I think the market was looking for any reason to dump because, again, all throughout September, we really haven't had a massive reason, and maybe we do over the next coming days, but that is what was said. And then you had Trump yesterday, who basically said, "Hey, I'm going with Ukraine against Russia." I mean, in the Alaska conference, Trump was supposed to broker a deal between the two, and Trump said, it was a really good meeting. Unfortunately, that meeting did not end up working out to lead to any meaningful end to the war. Yesterday, he put out a long post on Truth Social saying, "Hey, I think Ukraine can actually win the war. I am disappointed in Putin." He said, quote, apparently our relationship meant nothing because Russia has not cooperated at all in terms of ending the war. And from a geopolitical perspective, if Ukraine is going to continue fighting with Russia and Trump is going to be supporting Ukraine, then there might not be an end to this war anytime soon. And that also could have created a little bit of a sell-off as well. So I think that, along with Jay Powell's comments, is likely why we had some pain. But outside of that, I don't think there was any other fundamental reason for why that went down. Triple V, thank you for the super chat. Appreciate you being here. Thank you for the $200 super chat. I told you guys, Triple V ended up shorting Open Door at 10.20. He covered the short yesterday, so he was able to make some good money on that. And I also told you guys he bought 1 million shares of Grab, so he is now long about 5.5 million shares of Grab. I think average is around 560 to 570. And he did have that Open Door short. Again, the reason for why Open Door fell was some of these institutional investors started selling around that $7, $8 range. So if you did end up going short at 10, but Skrelly, by the way, was short at 10, but he covered at 8.90. So he just covered a little too early. If he had waited like a couple of hours, you would have had those 13 Fs come out of massive institutional selling, and that would have really led the short to be profitable. But yeah, Triple V did have a nice little open short. As you guys can see, he goes long and short. He doesn't, he's not really emotional about this. It's like, if it's going up, I'm buying. If it's going down, I'm shorting. And that's kind of his strategy. So that's what we have there. Does Triple V own SoFi? He does not own SoFi. He has a lot of hood, but he does not own SoFi. Hood right there, 127.42. Now Hood got upgraded to 140 by Piper Sandler yesterday. These prediction markets, guys, they're becoming a real big thing. And Piper Sandler basically said yesterday, hey, we think that prediction markets are going to be 200 million of revenue by the end of 2026. Right now, it's doing about a 50 million trailing 12 months revenue launch. They've already done $2 billion worth of trading on those prediction markets. I mean, this is the magic of Hood. They can find a new vertical, attach themselves to that vertical, dominate in that vertical, and then turn that vertical into a 9-figure business model for them, or a 9-figure revenue business for them. And if that continues, then I think, Hood will just have more and more momentum along the way. So that is very nice to see on Hood, and Piper Sandler obviously giving them an upgrade based on that increased estimate for what they think could be playing out. All right, last chart before we get into the market open. Take a look at this. ChatGPT launched in 2022 November. NVIDIA's revenue since then is 41 billion a quarter on average. Intel's at 4 billion. That chart right there, I saw this morning, and it's one of those things to remember. The reason we are having this massive AI revolution, the reason all of this data center CapEx is being spent, is because ChatGPT, OpenAI changed the world. It required massive amounts of compute, and that has led to massive ROI for these companies. And as a result, they continue to spend. And as that continues, we hopefully get to see more momentum throughout the entire market. All right, folks, here we go. Wednesday, September 24th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. Hoodie opens up at 128 on the day. We are green. 127.45. We got to, 128.42 on Robinhood. That is quite incredible at the open. Got rejected right at 128.42, but still, that is green. Palantir, 183.43. That is up 0.5%, and that is green as well. Tesla, 429. That's up 1% on the day, 429.74. Tesla did get to 444.99 yesterday, or I think that was 2 days ago. Yesterday got to 440, so trying to break through 445, but that is green. NVIDIA, that is up 179.28. That is also up about 0.5%. It's green. SoFi, 29.34. That is trying to get some momentum. Grab, 632. That did get to 662 yesterday. Unfortunately, wasn't able to break that 662 level. Now it's 635, trying to get back to the 650s, which would be very nice for Grab. Hopefully consolidating in the sixes, I think, is going to be really important. Reddit right here, 241. That was down about 7% of the day. SoFi, 29.42. Meta, 758. Meta is green. So you got Meta getting a bit more momentum. PayPal right there, 67.93. Salesforce, 245. IREN, what do we got on IREN? That is up 44.40. Wow. All-time highs on IREN. That's up 7% on the day for IREN. How about Oklo? That is up 142, basically flat on the day. Cypher, that's likely green. Cypher is also green by about 5%. Hoodie, back to 128. Back to 128. 128.32. That is up 1.64%. IREN did get a price target upgrade on 78, and they got 82 yesterday. So 2 price targets in a row. Obviously, the market is seeing IREN as a massive player in this data center build out. And that's why the street continues to buy. Grab right there, breaking 640, and then Hoodie. Is she going to go for 130 this week? It would be quite incredible if she does. But we got to see. I mean, she's definitely trying to go for 129. IREN right there at 44. Intel's at 29.46. You got Baba right there breaking out. That's up 8.2% on the day. Rocket Lab, which was up 14% yesterday. Rocket Lab giving back some of those gains, down about 2.3%. So that one at 51.70, still holding 50, which is nice. Nebius, what do we have there? 108.68. 108.68, holding the 100s. That is up now 50% from just a week and a half ago when they got the Microsoft deal for about $20 billion. Wow, Hoodie, 128.50. 128.50. I will check resistance at 129. BMNR, are we holding 55? 54.42. So just below that range. Just below that range, but let's see if that can break out. 129 resistance on Hood is 6,000 shares. 6,000 shares. BMNR is down. Ethereum, that 41.74, slightly green as well. GameStop, how is that one doing? That's at 26.90. That's up about 0.37%. That one's actually up about 5% for the week, which is not too bad. Microsoft right there, that is also at 5.10. So that one not doing horrible. GameStop actually up 2% for the week, 18% for the past month. So if you went long a month ago, not horrible. Circle right there, 134. One of the competitors to Circle, Tether, is raising $20 billion at a $500 billion valuation. That is up there with OpenAI's valuation. Tether is another stablecoin and a company that operates stablecoins. So that's a pretty aggressive valuation. I don't know why they deserve to be trading 13x the multiple of Circle. I know they don't have to give up all their distribution like Circle does with Coinbase, but still seems a bit aggressive. But Tether is raising. So it just means that more stablecoin adoption likely is continuing to increase. Investors are willing to bet on that. App11 right there, 655. And that also is very bullish for Ethereum. Robinhood right there at 128. Where's Fubo? They have a merger vote coming up on September 30th. That's going to be big for them. That's up about 1%. A-Lab is tanking. Did they have earnings today? That's down 11%. I don't think they had earnings. There's got to be something else that's hurting that one. Down 11%. I don't see anything fundamental. Looks like it's technicals. Morgan Stanley. Nope. Okay. Morgan Stanley said the NVIDIA Intel partnership would hurt A-Lab. That's what I'm getting from Morgan Stanley. It says there is some concern that this extension of NVLink into the x86 domain could replace the traditional PCIe connection between the x86 CPU and NVIDIA GPU, which would impact Astera Labs. All right, so it looks like a Morgan Stanley, not downgrade, but at least kind of caution is creating some of that pain on A-Lab. Google right there, 250. SoFi, 2932. ABAT, American Battery Technology, that is up 18%. Another small cap, 577 million. Obviously, these guys are up because they engage in the development and marketing of lithium-ion batteries. So all of the battery plays, or at least some of the battery plays connected to lithium, are getting some momentum. Lithium America is 86% on the day. 86% on the day. The United States government wants to take a 10% stake. Again, that's not been confirmed yet by the company. That was a Reuters report yesterday, but it seems like that report is accurate and the market is pricing that in. Open Door up about 3%. Open Door 760. That is up about 3%. Nebius did get upgraded today to 206. That is the highest target on the street, 109 right there. That is a new all-time high for Nebius. It did get a 170 and a 185 price target a couple of days ago. So you got some firms coming out saying, nope, this thing's going to 200. And it is going higher. Robinhood right there, 127.80. Where is ASTS, which had a monster day yesterday? So for anyone who's in that, congrats. 56.50. That's up another 3% right now. UNH, are we running on UNH? UNH 353. That's up 2%, breaking 350. Very nice. It broke 350 a week and a half ago, but then it fell back into the 330. So it's nice to see that one make a rebound. IREN continuing to move. My goodness, $46. This freaking stock is up 500% in the past 6 months. I mean, I have 100 shares of it, but goodness gracious, dude. Like, and I bought it at 28.90. I thought I was coming in late. Like, I did not know it was moving up 50% higher from 28.90. I mean, congrats if you're in it. Year to date, it's up 340%. Past 5 days is up 20%. Either it's really frothy, which, you know, one could argue, yes, that is probably part of some of this momentum. You got definitely some FOMO coming in, but if IREN is one of the core components of this new data center build out, particularly around the new sites that Oracle mentioned in New Mexico, the Midwest, and Texas, which from my understanding, IREN has some data centers very close to all three of those areas. I think that's also leading to some of the speculation right here. And that's why that stock is up 11%. Again, they used to be a Bitcoin miner and they have completely transitioned. Cypher right here, that's up another 9%. Bitfarms, is that moving? That is up 6%. And then CleanSpark, which now wants to become a data center play, that is up 6%. All of them getting some love. Uranium Energy, UEC, that's up 5.3%. Is Oklo still flat? Oklo still down about 2% of the day, but a lot of the energy names getting some love. Tesla getting a little bit of a run at 434. Hoodie keeps getting rejected at 128, but it did get to 128.69. And then Palantir did get a new partnership with Boeing yesterday. Really nice to see legacy defense manufacturers or defense contractors working with software, modern defense contractors, but the new partnership is just going to modernize the fleet of a lot of Boeing airlines from a defense perspective. And so it's great for them to get that partnership as well. Riot, how about that one? That is up 11%. Is Riot now a data center play? This thing was stuck at $9 for the majority of like the past 24 months, to be honest. I would imagine, I don't keep up with this one, but I mean, they're probably getting into data centers. Why not? Why not? They have the capacity. They have the facilities. Yeah, wow. We got a price target of 24 or 26 on Riot. And there you go. Look at that. IREN 78, Riot 26, Cypher 24. Quote is demand from artificial intelligence computing provides long-term opportunities. They see IREN benefiting from self-funding its data center construction, and the other three getting to Riot in particular, $2.3 billion of recurring EBITDA by 2031 from 2 high-performance compute data centers on co-location rental models. That is totally different from Bitcoin mining. But that is why these stocks are moving. That is why these stocks are moving. Pretty incredible, dude. ServiceNow, I think they got an upgrade this morning as well. That's up 4%. This is another software play. Where's Salesforce and Adobe that have been pretty stagnant? Salesforce 248, that's green. Adobe, that's down 3.6. Yeah, our boy TJ has a big position in Riot. He's been long Riot for a long time, and he's believed in them. He's literally been to the facilities in Texas. And now the transition into a data center play is allowing that position to really, really benefit. So far right there, 29.28, that's down about 0.57%. Even Marathon, which I guess these guys are turning into a data center play as well. They also have like 50,000 Bitcoin, which helps them. But Marathon right there, 1873. That is up 5% on the day. Quite incredible. Where is Amazon? How's that one doing? Basically at my average, 222.40. All right. Either this one's going down at 210, and we're going to have to DCA, or it's going to be able to have a good quarter and really break out into the 240s. But that one is probably going to take another month to see how it plays out. Amit, I've got 41 covered calls on IREN December 19th. So given that IREN's pretty close to your price, I mean, at 46, it's probably a little bit above your break even. You should roll if you want to keep the shares. But you can also give it some time, right? The stock is up 500% in 5 months. If you think it's kind of topping out right here, or it's not easily going to go to 55 next week, which maybe it does. But if it doesn't, then you can probably collect a little bit more theta before you roll. It's a question of how confident you are on these stocks. Whenever you have covered calls on stocks and you get in the money, and you get underwater, it's not something to be scared of. It's more so a question of, hey, how confident am I that the price action on this is going to keep going against me? And that comes down to understanding a little bit more of the thesis around the stock. Now, if you don't understand the thesis, then you probably sold the covered call for the hell of it, and you never really cared about keeping the shares. And you just have to remind yourself that. And that's why it might be okay to let the shares get called away as well. Duolingo at 303, that's up 1.2. IREN breaking through 47. So this one now 13% on the day. Also, the float on this is not that large. IREN float is 270 million shares. That's just not a lot. We'll look at the short float if there's any massive interest. 11% short. That's a decent amount. So could it squeeze, which could also impact if you should roll the covered calls? 300 million shares outstanding, 10% float short. Yeah, I could definitely squeeze. It's not going to be as aggressive as if it was like 20 or 30% short, but we might be even seeing the squeeze right now on IREN. Lithium Americas, again, that one's still moving, now up 75%, down a little bit. It was up 85, so it was at 580, now at 540. Volume on this, 68 million. My goodness. That is heavy. Grab volume is 5 million in the first 10 minutes. 641, that's up about 1.4%. Google, 249. Google actually going below 250. And then SoFi is 29.05. I don't see any news on Marathon. I think it's just running with the other Bitcoin miners. And that's why it's getting some momentum. Now, this news that came out last night as well, very important for the stablecoin market. The CFTC, Commodities Future Trading Commission, announced they plan to allow stablecoins to be used as tokenized collateral in the U.S. derivatives market. AKA, people can use their tokenized or digital dollars backed by stablecoins as collateral when trading options and a variety of other financial instruments in the derivatives market. What that simply means is a lot more liquidity enters into derivatives, and that liquidity being backed by stablecoins creates more demand for U.S. Treasuries. So whether it's the Fed, whether it's the Treasury, whether it's the government, the president himself in terms of Trump, whether it's the SEC or whether it's the CFTC, all of them are aligned on this idea that tokenized equities and tokenized stocks and stablecoins should be a thing. And I think that's the broader thesis for Ethereum. Bitmine right here down about 1.8%. By the way, Ethereum stablecoin supply has now hit a new all-time high, 180 billion. This was 150 billion 3 weeks ago. So, I mean, it is rapidly moving up, and you're seeing a lot of that come on to the Ethereum chain. Palantir back to 184, baby. There you go, 184.25. Hoodie, 127.38. And IREN is not stopping. Hit 48. It is up 14% on the day. That one continues to be green. Nebius at 110. Dude, all the data center plays are going green. Do we have a watch list for data centers? Do we? Yes, we do. Okay, we got to add some more to this. So GE Veranova, that's up. Constellation Energy, that's up. VRT, that's up. VST, that's up. Cypher, that's green. IREN, that's green. Bitfarms, that's green. CleanSpark, that's green. Now, Oracle's down because they had some corporate debt today that they offered, about 14 billion. So that's why that's down 3%. But that's more so a question of corporate debt versus the overall trend this morning. Bloom Energy is down 16%. Really? Whoa. What is going on with Bloom Energy? That one should not be down 16%. Bloom Energy, Jefferies downgraded to 24. Analysts flagged rich valuation and limited post-2026 visibility as downside risk. I didn't know the stock was that volatile to be down 15% from an analyst downgrade, but I guess it is. That one right here down about 14.3%. Hive, that's up 6%. Another company that's up there, CoreWeave, that is down 2% on the day. Nebius, that is now hitting a new all-time high, up 2% at 110. We got to throw Oklo in there, but that one's slightly down, even though it's been up for the past month. I mean, all these names have obviously been getting a ton of momentum, and it's not looking like it's slowing down. Heat map, let's pull it up. What do we got? Wow, green day, dude. You don't got to wake me up when September ends to see that it's a green day. I know that joke is getting old. I get it. I need to wait till October to get some new jokes. But dude, look at that. That's pretty green. I mean, you got healthcare's a little red, consumer defense is a little red, real estate's a little red. Everything else, pretty damn green. We haven't had a day like this all this entire week. Usually it's something that's super green and everything else is super red. But this one continuing to get some momentum. Intel's that one up 4.5%. Intel, that's green, 3.6. Cores Scientific. This one was associated with CoreWeave. That one's up a little bit right here. I mean, everything. Is SMCI running? SMCI is also running. That's up 1.4%. So NVIDIA slightly green on the day. The only one that's not really benefiting from all this is NVIDIA. Now, obviously, I know they're already worth 4.3 trillion, but even after that announcement, they were not able to hold the 180s. So I think the street still is looking for more earnings. BM&R, are we tanking? Are we tanking? There you go. 2.4%. She's down. Look, again, like at the end of the day, I'm sorry, but just no one can be surprised about this. Ethereum is down from 4,700 Bitmine was at 60 last week when it probably shouldn't have been, given Ethereum was starting to decline to 4,400. Now Ethereum's at 41, Bitmine's down. It is what it is. This is how this one trades. So yeah, is it annoying that it's down? Sure, but I mean, you got to be honest with yourself. This is a name that is rooted in volatility. And if Ethereum's not moving up, eventually the multiple starts to compress, which is okay. I think that's healthy. I think it would be irrational for it to be overly traded against its MNAV. But this is more so just a long-term bet on hoping Ethereum comes back. Better is down 7%. Okay, so this is up 40% for the week. That's down 7%, or actually up like 100-something% for the week, 150%, but that one's down 7%. And then Rocket Lab, I don't know why that's... Dude, Rocket Lab's weird, bro. This thing has been going from 47 to 55 like for the past 3 weeks, back and forth, up and down. And I don't know what swings it up or down every day, but that seems to be what's playing out. Okay, the reason QURE is halted is because Skrelly tweeted that it's a 10x from these prices. I think they had a drug trial that worked out really well. That's why it's up 200% right here. Again, I wouldn't jump into this because it's already up 200% on the day, but that's why Unicure is up. I have no idea what they do, but they're obviously a biotech that's doing well. So that is green. Yeah, the other thing about Bitmine is they could be diluting, right? They could be diluting. So like at the end of the day, you really need Ethereum to make a move for Bitmine to actually break out into the $70, $80 range that people think it can. But until that happens, it's going to be flat. And if it's not flat, it's trading probably a bit irrationally, which is okay. But that stuff tends to correct, just like it happened with MicroStrategy. So you got to really believe in Ethereum long-term for Bitmine. And in the meantime, covered call premiums are juicy. Now, again, you can get your face ripped off on them, so you got to be careful with it, but it's not that crazy to yield some of the volatility. S&P 500 basically flat. S&P 500 basically flat. HIMS has another issue with the FDA, really? Goodness, dude, down 3.5%. Oh my gosh, every other day. First it's Super Bowl commercials, then it's compounders. Now it's something else. I'll try to see what the news is. But of course, the FDA finds a reason. Marvell, is that one moving? Micron is still down from earnings. Marvell, that's up 5%. All right, so Marvell doing okay. That's recovering from 62. And then Micron is down about 2%. Amit, will you buy the dip on BM&R today? Honestly, probably. Where is it at right now? 52. Okay, screw it. Let's buy the dip. Let's do 50 shares. That's down from 60, right? That's down decent. That's down like what? 18%. All right, we'll do 50 shares. There we go. Let's throw it in there. I saw it on screen. All right, we're in for 50. If it goes below 50, I'll get a bit more excited, but there you go, 50. Now, again, if Ethereum tanks below 4,000, this thing is going probably below 45. But we got to see if Ethereum can hold on. So, all right, 52.88, 52.83 to be exact. We got 50 shares in. Robinhood right there, 126.90. That one's starting to go down a bit. You get sell covered. Selling cash good puts here is not crazy either. I don't think that's crazy either. I mean, again, you got to just pick what targets you like, but the premiums likely on a day like this are going to be probably very juicy. So I don't hate that. SoFi right there. All right, so now you're starting to see some red candles. SoFi down 1%. S&P down half. S&P just went red. NVIDIA is going down 0.010. Pouncer just lost 184. And then Hoodie likely ready to lose 126 potentially. Webull is up on the day a little bit. Rocket Lab, again, I cannot tell you why this one's down. There's no fundamental news, not that I'm seeing. 8%. But then again, why was it up 14% yesterday? Right? So it probably is a lot more random than we think and potentially just algos. I'm going to see if there's any news coming out right now that could be causing a little bit. Vlad just tweeted, our matches coming to RIA clients. In the months since we've acquired Trade PMR, we have been hard at work to bring Robinhood together with Trade PMR's deep industry experience. We've been cooking, and the 0.5% match is just the start. Okay, not too bad. So if you are part of a Trade PMR RIA and you bring your assets from whatever brokerage into Robinhood, they're giving you a 0.5% match. That is not too bad. There's $40 billion in custody via Trade PMR, not all on Robinhood, but in a lot of other places. And that match would definitely be good for them. Skrelly just tweeted, FDA has no choice but to approve the QURE drug. Drug could do $2 billion in revenue easily, 5x bare minimum from 35. Okay, so that's why that one is pumping. Now, again, you got to take Skrelly with a grain of salt. He understands biotech very well. He's been very successful on shorts in biotechs, but that doesn't mean that he has to be correct on this. But that's probably why, along with the drug test itself being successful, that's likely why that one's pumping right there. So that one is green. All right, some headlines. Let me see if I can find anything. Did we have any Trump tweets? No. Macro data. Do we have anything yet? Nothing. Mortgage rates fell, which was nice today. Mortgage rate 6.34%. That is up from a couple weeks ago, but it is down from 6.39. So you got mortgage rates coming down. Germany business sentiment survey shows a weakening. That probably is not affecting the United States that much. And then new home sales. All right, so in about 8 minutes, we get new home sales. That'll be important. Maybe the market's dumping a little bit before we get those new home sales. S&P now 662. That one is also red on the day. All right, let's see. Is anyone buying anything? Put in the chat. Or are we waiting for a 1030 slam? What do we see going on? Grab right there, 627. Grab as well, losing the 630s right there. That's down about 1%. So you got a lot of names. Meta's holding on by a thread. Amazon's barely holding on, but that's slightly green on the day. And then Hoodie, very close to falling below 126. Tesla's actually going up in the face of all this. Tesla going the other way. Averaging up on SoFi, buying Rocket Lab, buying BMNR. Just watching, not buying. Buying Corey at 125 or lower. Buying some more Joby. EOSC brought Rubrik. This one's getting a lot more excitement by people as well. I know our boy Sam is bullish on this. That one's down about 1.74%. Yeah, I don't know. We need some more data. We need to wait until at least 10:30 to see what the trend is today. Because we've seen this happen the past couple of days, and immediately you get a rebound. Now, look, maybe we're due for a little bit of a real sell-off, and you don't get that rebound today. But then again, even yesterday, you had somewhat of a J-Powell sell-off and people swooped right in by the end of the day. So we got to see. This is a little bit different than last week, where you kind of saw a lot of momentum, and then you saw a sell-off around 11. Then at 1 p.m., people came back in. This one's happening within the first 30 minutes. So we got to see kind of how the market thinks of it. Pound right there at 181. Ondas, this one has done really good over the past couple of days. I know it's down about 4.3%, but over the past month, it's been one of the main drone companies that's done well. IREN is down to 44, down from 48. All right, so got rejected at 48. That's down right here. Open Door, are we green there? Open Door is green, up 7%. Again, it was down 15 yesterday, so a bit of a 50% recovery. And then Enphase is also green. Abcelera, I don't know why that one took off a couple days ago. It's up 1% right here. I don't think they had any drug results or anything like that, so not sure exactly. Maybe they released some updates from the trials they're doing, but this one, again, is a bit more of a long-term hold that is going to take time to play out. Same thing with Next Decade. I mean, there's really no TA to do on Next Decade. Like, you either understand the story around their pipelines and you buy it and wait, or, you move on from this. But Next Decade right there, that's down another 1%. Again, Bloom Energy being down as much as it is, that's just weird. On a downgrade, being down about 14%. Let's pull up the stock draft, see how that's going on, and then we will get home data in about 5 minutes. We are still in first place. Matt's up 28.6. I'm up 30.5. Steve's up 5. Tanner's up 21. And then Chris is up 9.8. So we are still in first place on the stock draft. U.S. Energy Secretary states that $13 billion will go to the Treasury, which was originally intended for green energy subsidies. She added, "We will see solar development in the U.S., but not subsidized." Okay, so you have a potentially different way of allocating the capital that was intended for green energy subsidies. A lot of that in the Inflation Reduction Act in 2021 was given to a lot of EV charging stations, solar panels, et cetera. One of the reasons why Enphase took that big of a hit is because the big, beautiful bill kind of reverses a lot of that. Enphase right there, 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37.89. 37 and you're seeing some of that capital get allocated somewhere else. Bitcoin right here, 112, and Ethereum 40. I mean, Bitcoin and Ethereum are holding on. They're not really tanking. They're actually green today. I know they've been kind of trash for the past 2 weeks, but they're not getting decimated. BMNR 52.86. All right, basically where I bought it at 52.83. So we got to see if this one actually breaks down below 52. But that's down 3% of the day. Why is Amazon red? Well, it's Amazon. I mean, honestly, I mean, there's a couple of headlines about they're shutting down their grocery stores in the UK and stuff like that. But yeah, it's Amazon. I think until we get a really strong reacceleration in AWS growth, we're not going to see that much momentum on Amazon. But that's when it's time to accumulate, right? That's when you buy it, when the growth is not fully there. One thing about Amazon that's important, I said this yesterday for Jason, and he didn't understand this. Tesla, one of the only names that's green. And a lot of you guys probably relate to this, but if you share an Amazon account with your family, like let's say your mom has an Amazon account and you live not with your parents anymore, and you will still want to order stuff to your house, your new apartment with Prime, you can do that under your mom's Amazon account. I may know someone who does that. And so you don't have to buy a separate Prime account. You can deliver a product to yourself in 2 days or less, a different address, even if it's under one account. That is stopping October 1st. That is stopping October 1st. And quite frankly, I think that might compel a bunch of people to sign up for a Prime account, because if you can't, I mean, the whole point of Prime is the 2-day shipping. So it's kind of like Netflix cracking down on password sharing. That could be a tailwind for Amazon, even though it's super annoying. And, it's one thing that could potentially increase the Prime subscriptions. So yeah, asking for a friend. Exactly. Asking for a friend. So if you use a family account to ship to your, like my cousin in California uses my mom's account to ship Prime products to herself in 2 days or less, that's stopping October 1st. You can still ship to people. You just can't do it in Prime 2 days or less. And I think that might change stuff. But it looks like that's what's happening on October 1st. How's that bullish for Amazon? That's not good for the brand. It's definitely not. I mean, same thing with Netflix, right? It wasn't good short term, but it is indeed happening on October 1st. And maybe it does lead to more subscribers that are happening as well. So we're going to see. Yeah, I mean, unless you're both on Prime, then that doesn't happen, because obviously, you're both paying for Prime. But yeah, the point is that could obviously help Amazon, but we just got to see how the market ultimately reacts to that. October 1st is when that should be happening. All right, housing data. We should be getting that in about a minute. Let's pull that up. Let's see what we got. New home starts is what we're looking for. Really does care about this stuff because of rates coming down and the expectation that could be a catalyst for new home sales. Street wants 652,000. 652,000. We're going to see if that one actually comes through. Amazon can get to 300 faster than people can imagine. Dude, Amazon might pull a Google. Google was stuck at 150 for a long time, and then when it broke out, it was pretty violent. Not crazy to imagine that could happen to Amazon. It's really not that crazy. Now, granted, Amazon's margins are not as juicy as Google. They don't have this massive AI tailwind in terms of like competing with ChatGPT, Gemini. That's a little bit more of a sexy story, especially now that the DOJ stuff is gone. But AWS advertising and the overall commerce business are not slowing down. They're just not as fast as the street wants it to be, but that's not a reason to keep it up 1% year to date. So we got to see. All right, what do we got? Wow, 800,000 homes. Oh my. In the month of August, new home sales month over month, that's up 20.5%. Holy guacamole. That's a big one. That is a big one. 800,000. Let's see if the housing stocks are running on that. Open Door, up a little bit more. It's up about 1% from that news. Zillow, is that running? It's down about 0.5%. Now, we didn't cut rates in August, but I guess the expectation of cutting rates in and of itself was enough to get those new home sales. And that's likely. The mic is bad. Hold on. How about now? How about now? Yes. Good. Good. Yes. Yes, yes, yes. Hold on. Let me switch.
Annualized rate in August. The street was looking for 650. This is up 20.5% from July and up 15.4% from August of 2024. Now, we've been talking about mortgage rates, of course, forever, and they didn't come down in August. These numbers are based on signed contracts, so people out shopping in August when the 30-year fix had not started its steep drop that we saw in September. So it was well over 6.5% in the high 6% range. Now we're down at the 6.3% range. So this is a surprise. But again, we've been talking about the builders, their incentives. Lennar's earnings last week, they said they're doing price cuts. They're doing all kinds of mortgage rate buy downs and other incentives. Let's look at the price today. The price of a new home sold was $413,500. This is 4.7% above July, and it is above 1.9% above August 2024. So prices going up on this. It's really interesting that this is happening. I guess people getting back into that market before the fall season, which is usually kind of the second most busy as opposed to the spring season. But it is a real surprise to see prices go up as well as sales go up. Inventories, though, we're looking at a 7.4 month supply. We had been at a 9-month supply in July. So inventories coming down, builders obviously making the push to get people in the door, but builder sentiment, again, wasn't so great in September. So these numbers are really quite something. Again, 800,000 up 20% month to month. Back to you.
Yeah, Diane, a lot of cross currents there. Thanks for breaking that down for us. Let's turn to the broader market now with stocks trading right around record levels. Joining us here on set is Gabriela Santos.
Okay, markets or voice should be good. Audio should be good. Yes, let me know if not. Dude, 800,000 is wild. Absolutely freaking wild. I mean, you would imagine Open Door probably getting a little bit of a boom on that. Open Door right there, 785. That's up 10%. Bro, 800,000? We haven't seen a month like that. I mean, let me try to find, when's the last time we had a month like that? It had to be more than a year ago. My goodness, new home sales, 800,000. January 2022, folks. January 2022 was the last time we saw that. Let's look at some of the home builders. D.R. Horton, that's up 1%. And Lennar, that's up 3%. They are liking that news. The average over the past year has been about 300,000 a month. So this is well above the average. It's up 20% from July and 650. And sales in the Northeast were at 31,000. South was at 530,000 and Midwest was 31,000. The West was 150. So the West and the South 530, West 150, created the majority of that 800,000. Bro, that's aggressive. That is aggressive. Better, which is being pitched as the Shopify mortgages. That one is down 6% on this news. S&P just went green. Maybe the housing starts are another part of the sector that's getting the market to be exciting. January 22 was also the top. That's fair. That's fair. That's a fair point. That's a fair point. We got to see. I mean, again, every time we get those historical tendencies to kind of call a bit of a more uneasy way to think of, the top of the market, you just have to remember, well, was there AI at that time? Was there CapEx? Was there corporate earnings? I mean, there's all these counter arguments to it, but yes, January 2022 was the last time we saw that. Now, granted, we were getting into a rate hiking cycle. So the reason people probably bought in January 2022 is because they were afraid of rates being hiked as much as they did. And you were right to do that because rates got hiked up worse than 40 years. Maybe now is the opposite. Could these numbers be rigged? I mean, I don't know. Housing data, I feel like, is not as easily rigged as, maybe I'm totally wrong with this. I feel like I don't think housing data is surveys. Like, I feel like housing data is actually looking at the number of houses that are sold. Maybe I'm wrong on that, but hopefully that's not something that can easily be rigged. Gabriela Santos, JP Morgan, one of my favorite analysts. Let's get her perspective on what's going on, and then we'll keep going from there. I'll try to get some more updates on this housing data.
Morgan Asset Management. So you're looking at a lot of the cross asset moves, and you say that the focus has now been more by monetary policy versus the fiscal and trade and other immigration policies coming out of Washington. How do you expect stocks and bonds to perform with monetary policy at front and center right now?
So I do think after a very policy-heavy first half of the year, driving every single daily minute-by-minute move in the markets, it's a much healthier place to be, a better understanding of equilibrium of policy, and so something that's less of an acute issue, more of a chronic issue for markets. And now the leading narrative has been the return of Fed rate cuts. Now, traditionally, you do tend to see both stocks and bonds do well when the Fed cuts rates, especially if there's no recession. But there is a caveat we would add, and we've been making with clients, which is we don't want to fight the Fed, but we also don't want to swim too closely with the Fed. There are important nuances here of this particular Fed rate cutting cycle that's important to take into account in terms of soggy growth, elevated valuations, curve steepening, weaker dollar. So we can't exactly do a carbon copy paste of other Fed cut cycles.
Right, because conventional wisdom would suggest that if you are cutting rates, then that could potentially catalyze the economy higher. But you suggest that that soggy economic conditions would continue despite the Fed rate cutting. Does that depend on how much they cut and the extent to which they do? Or is that just kind of the place that we're in right now?
A bit both. In terms of the extent, yes, that does matter. And I think we need to remember this is no longer the post-GFC pre-pandemic environment. One important thing is different. That's inflation. That's not a stop sign to Fed rate cuts, but it is a speed bump. That means they're talking about getting back to neutral or an idea of neutral around 3%, just an additional 100 basis points of cuts. So let's not expect that Fed to inject that extraordinary amount of liquidity anymore. And the second is just this economy is less interest rate sensitive. We saw that as rates went up, with the exception of housing. So why would we think it would be different as rates slowly start to come down? So I think much more important will be broader economic policy and how it's shaping cross-asset nuances, as well as the structural drivers there that are super important to the economy and this market around, for example, AI here in the U.S.
And you mentioned valuations and kind of where stocks are in the Fed cutting, despite some of these concerns around valuation, which Fed Chair Powell himself raised concerns about. Is there a reason to adjust one's portfolio based on that? And how do you think investors should be essentially hedging these concerns without giving up potential upside?
Yeah, exactly. It's not to be bearish on equities because you hit a certain level of valuations. It tells us nothing about the next 6 months, 12 months, but it does tell us a lot about expected returns over the next 5, 10 years. And we've now reached a point where multiples are at 23 times. They're more expensive than we started the year, which is some of the highest levels we've seen in 20 years. So that should moderate your expected return. So a lot of conversations we're having with clients now, finally thinking about active within U.S. equities. That's a huge change. And thinking about international equities, given the huge outperformance this year, which we think is just the beginning. The second implication for us is also when valuations get so extended, there is room for disappointment. And as a result, is there a way to take chips off the table, just at the margin if there's a...
You got Santos being a little bit more cautious than super bullish. And I mean, that's kind of how she's always been. Back in 2024, she was a bit more bullish simply because, we didn't have valuations at these levels. But you can tell just through the tone of her voice, she is thinking, all right, we're getting up there. We're getting extended, maybe taking some profits and not deploying capital as aggressively is not the worst choice.
A little bit too much exposure to equities at this point, too much let it ride over the last few years. There's a way to hedge your downside on a predictive basis with options, for example.
Do you feel like the biggest risk with valuations where they are is still a monetary policy risk if the pendulum has shifted to that? Or is there a risk that something could come out of Washington that disappoints the markets and therefore the pendulum shifts back to focusing on, some of the trade volatility that we saw earlier in the year, some concerns around other types of policy?
I think in terms of policy, it's less policy change. It's more the actual policy impact. And when it comes to equities, it's really the conversation around margins. So it's great for monetary policy that CPI hasn't picked up as much as expected, but that's not a good thing for margins because we know U.S. companies are paying these tariffs at the border. So if it's not showing up in consumer prices, it's going to show up in margins. So I think, is there disappointment in some of that expected margin expansion later in the year and next year? And we think so, yes, especially for consumer-oriented sectors as well as small and mid-cap. So room for some of that recent trade to disappoint. And then the second big one around the AI theme is still, we get this more up and down now because very clearly there's more focus on the CapEx that's being done. How much of it is leading really to an increase in percentage of cash flow, percentage of CapEx as a percent of cash flow that's been rising this year, and what is or is not the return on investment of all that hundreds of billions and trillions of investing that we're seeing.
Yeah. And so
All right. So Gabriella getting a bit more, I wouldn't say bearish, but cautious. Robinhood going down, lost 126. Palantir lost 181. Tesla is somehow holding on. You got a lot of high growth beta going down. Grab at 628, Google 249. SoFi not really able to break 30. Nvidia barely green. S&P is barely down, but it is red. Reddit's down. Amazon holding on by a thread to 222. Salesforce up a little bit. PayPal up a little bit. Kind of like a 1030 slam happening early, but it's not really a slam. It's more so just like a sell-off from the high of day and then going flat. Same thing with AppLovin right here at 655. So there you go. Nothing too exciting to the upside right there. Bloom Energy, that one's recovering a little bit. It was down 17. Now it's down 13. PayPal's actually green. You got some green on PayPal. VIX is up indeed. Volatility up by 1%. So, and VIX has been below 20 for how long? Last time it was above 20, April 8th. No, last time it was above 20, actually above 20 was, May 8th. I mean, it got back there for a day on May 23rd, but since then, like it has these spikes. June, it got to 20, then it just came right down. Then July, it got to 20, then it came right back. Like every time it spikes, it was just a buying opportunity. So it's hit 20 a couple times over the past few months, but not enough to sustain some actual pain. 71% of you, by the way, said green on a green or red day. Open Door, are we moving on Open Door? I mean, that one should be moving from that housing data. Open Door, 798. There you go. That's up 12.5%. Again, Open Door's got to increase their margins, but the fact that the transactions are coming back for homes is bullish. And if the CEO can do anything to increase the spread on the margins, then that could be one of the bull cases for Open Door. That one's up about 12% on the day. BM&R, did we get the bottom? Yet to be seen. We got in at 52.80. We're at 52.90. It did get to 52.30 at one point, so that was the actual bottom so far. But that one's still flat. The dollar's up today, is it? It's up a little bit. It's up 0.5%. I mean, it's been stuck at this 97 range for a long time, though. So although it's up, it's not like it's actually making a move to the upside dramatically. 10 years also up a little bit. The dollar is down like 10% for the year, right? For the year, for the year to date, it was at 108. Yeah, pretty much. It was at 108. Yeah, it's down 10.1%. Okay, so correct me if I'm wrong. This might be a dumb question, but I just thought of it. If the US dollar is down 10% year to date, then does that mean that you kind of have to subtract 10% from your returns year to date because the value of your year to date, if it's in dollars at least, goes down by 10%? Like if the value of your dollars are worth 10% less and you made 50% this year, like, isn't that technically 40%? That's true, right? Yes. Okay, well, next time we do year to dates, everyone subtract 10%. I mean, because technically, we lost 10% of purchasing power from the dollar. For the Europeans, it's got to hurt really bad, right? For the Europeans, it's got to hurt really bad. I mean, for the U.S. citizens, it's whatever, we can navigate it. But if you're in Europe, that dollar going down definitely is not helping. It means your taxes are 10% less. Oh, boy. Well, All right. So if you're up 50%, yeah, it's actually 40%. It's not a full 50 yet. Salesforce, right, they're up about 1%, and then PayPal, 68.51. See, you get into these types of monetary arguments, and it leads you back to Bitcoin. It just leads you back to Bitcoin at the end of the day. Yeah, Amir was telling me about this as well. He was like, when the dollar takes a hit, his portfolio like automatically loses so much. Now, when the dollar goes up, his portfolio, like, he doesn't have to do anything, right? It just naturally goes up because he's trading in dollars. And so when you convert that to his currency, it's naturally up by like 10, 20%. At least that's what it was in 2024. But to the downside, you know, you also have to deal with that same type of pain. All right, so we got the dollar right there, down about 10%. Hoodie, 125. Let's see if we have any other macro data today. I think housing data was the main thing. And that's pretty much what the market was concerned about. And now that part is done. Again, mortgage rates did come down a bit, which is really good. Mortgage rates down to about 6.39%. Here's an update right here on demand on those mortgages, given refinancing is starting to is also super bullish for SoFi.
Demand stalled, though, last week, even though interest rates fell further. The average rate on the 30-year fix for conforming loans dropped to 6.34% from 6.39%. And that's for loans with 20% down. But that's the lowest level since September of last year. But, I'll say but, that's a weekly average. And last week was really volatile. Early in the week, before the Federal Reserve cut its rates, mortgage rates, which loosely follow the 10-year, fell to the lowest level in 3 years. But in the days after the Fed cut rates, they shot right back up almost 25 basis points. So refinance demand, which again had spiked higher the week before, it just went up 1% for the week. And it was, though, still 42% higher than the same week a year ago. Now, mortgage applications to buy a home, essentially flat, up just 0.3% for the week, up 18% from the same week a year ago. Now, after a huge surge the week before in demand for adjustable rate mortgages, that's ARMs, demand for those riskier loans fell back again last week. So borrowers had been looking really for any type of savings on the monthly payment. Of course, ARM rates are much lower than fixed rate loans.
So I guess part of this is people are thinking the Fed's going to continue to cut rates, and maybe that shows up. Maybe they're pausing on that. But then there's a lot of people who think the 10-year is not going to move anymore because all of those cuts have already been priced in.
I think they're just...
And I mean, like, so yes, because given this home data, Robin, trying to get back to 126, if we had 800,000 homes that were bought with mortgage rates not even really being that low in the month of August, and we're just starting to see it come down a little bit from last week, from 6.39 to 6.34, a 20% move from 650 to 800. I mean, the amount of demand in that housing sector that's just waiting, just off the expectation that rates will come down, is pretty freaking aggressive. It's pretty aggressive. You know, the other thing that's exciting about this is that, like, if there's that much money waiting on the sidelines in that sector, it could be another avenue of growth for the broader economy. I mean, when we think of GDP growth, which, by the way, tomorrow we get GDP. Yeah, not today, tomorrow, Q2 GDP, hopefully coming in at around 3.5%. Right now, that's primarily being articulated as led by AI. If housing could start contributing to that, which it hasn't been for basically the past 2.5 years, ever since like the beginning of 22, that would be another way to kind of help make the argument that Trump has been making, that the big, beautiful bill, even though it increases the deficit, will be able to navigate it. GDP, also known as AI CapEx. Yeah, you might as well call GDP AI CapEx. That is true. I sold my initials out of Oklo today. I don't think that's a horrible idea. Put this in the chat. Are you a person that if you get up on a position, you will take out your initial? Let's do a poll on that. We haven't asked that question before. Will you take out your initial when you're up on a position? Honestly, I've struggled to do that. I usually just let it ride, but it probably is the healthier thing to do. Do you take out your initial on a position, whether it's a swing trade, long-term? I mean, because if it's long-term, if you invested like 100,000 into Amazon and you're up 100,000, if you take out the 100,000, the rest of it's house money, right? Now, granted, a lot of people, if on a name like Amazon, would love to just hold it long and see the compounding happen. But there are people that have a strict rule that they take out, like Sachin. He's a good friend. He has a very strict rule. He takes out his initial, especially on an options trade. As soon as he's up double, he takes out the initial and lets the rest ride, or at least 80% of the initial, because he just doesn't want to deal with potentially losing that money in case anything goes wrong. All right. Seems like a decent amount of Isaac says I just buy more. Dude, remember that stat yesterday I shared on retail? Retail investors bought 4.5 billion of stocks the day J Powell cut rates. And in September, the average has been 4 billion, which has been quite incredible. So you do have a lot of retail that's just piling in. 69% of you say no. Okay. Similar to me. 69% of you say no. I just sell covered calls instead of selling my shares. That's fair. My entire account is recycled money. I haven't made a deposit since December 2023. I'm up 300% of the year. Mine is the 10% with the dollar going down. Dude, that's pretty incredible though, right? To not have to put in fresh new capital. Let's ask that question. This one, I'm going to guess it's like 80-20. Do you deposit fresh capital monthly in the port? I mean, you do have some people that probably have a big enough port where they don't need to, right? Because, you know, the portfolio returns or their swing trades is enough to just add new money. Tesla, by the way, trying to break 440. But I think the majority of us probably try to add at least $100, like at the minimum, every month. I would say most people that invest do that. Wow, 51-49. I thought this would be like 80-20. Andrew says I haven't added money since 2020. Goodness, great. Okay, so I was wrong. I thought it would be the majority of us. Guess not. Costa says I had 1,000 a month. Carolyn says I had 4,000 a month. House of Cards say I had 5,000 to 8,000 a month. Scuzzy says I sell options to fund my growth. I think that's very fair. I mean, if you're getting option premiums anywhere to the tune of $2,000 to $3,000 a month, that's similar to a deposit, right? Erwin says every paycheck. Arthur says I put in 1,000 a month. Elaine says I put about 800,000 into Palantir. I pulled about 600,000 so far year to date, or so far to date in general. Well, Elaine, you're up a decent amount on that 800 grand. So yeah, you've definitely made a lot of those returns with the covered call premiums. Wow, I really thought this would be more than 50-50. All right. Well, regardless, any net new deposits definitely aren't the worst thing. Sachin says, there he is. There's in the chat. So, look, he put it in all caps. Sachin wants us to know his rule. I have a very strict rule on taking initial capital out in a trade and investment, as I've lost a lot of money on many good investments, so I force it without exemption now. Flexible is okay, but always take out the initial investment. Yeah, Sachin's been around the block, dude. I think when you lose money on an investment, like lose big money, you know, not like a couple grand, but you lose like in the six figures, you start to get really conservative on risk management and just be like, look, I could make 5x, but I'd rather make 1.4x and by taking my money out early. And I think that, you know, naturally just comes more with time. But I think that's a fair argument. Update on Micron. Let's get some analysis from the street, and then we'll keep going from there.
Why going into 2026? Take a listen.
Supply, Jim, is tight. And in calendar year 26, we see supply getting tighter. And our product position is good. We will, of course, continue to optimize our sales focused on return on our investments and disciplined investing in growing our supply as well.
Susquehanna senior equity research analyst Mehdi Hassani joining us this morning with the buy rating on the stock, price target at 200. Mehdi, it's good to have you back. We put a lot of weight into what Sanjay tells us about the cycle because he tends to be a pretty straight shooter when it comes to sort of qualitative comments about where we are. What was your reaction, especially coming off of the call?
I think the reaction is pretty much in line with expectation. We have been writing about the better pricing environment due to a richer mix of high value added product as well as a very disciplined spending environment. But I think the most important takeaway here, which I don't think Sanjay is going to elaborate on a live interview, is who is actually doing a lot of buying. Unlike prior cycles, actually Prior cycles were driven by distributors and
The question to who's doing a lot of buying is the Mag 7 and a lot of their free cash flow that is subsidizing this. Tesla 440, dude. Holy, this one's red in a sea of, or this one's green in a sea of red. I mean, pretty much every other high beta name, Reddit, Hood's up a little bit, Palantir, AppLovin, which is up a little bit, Coinbase, all of these are red or slightly green. Tesla actually holding on. 440, let me check resistance for 441 and see if this one can make a move. By the way, we didn't cover some of Elon's tweets. I got to show you guys that, let's just say we're not the most friendly to OpenAI, but I'll pull that up in a second. Sachin says, I've lost 6 figures many times and even 7 figures one time. And few times it wasn't even a bad move, but the markets and instruments can turn. So know your risk to the finest decimal and take initial chips off the table. Yeah, I mean, when you get to the point where you're losing 7 figures, it can definitely turn you to basically be someone that never wants to have the initial capital get lost. Because if you lose house money, you lose house money. It is what it is. Like, it sucks, but if you lose your money when you didn't need to, because you could have took the chips off the table, that's when it hurts the most. 441 resistance on Tessie. 19,000 shares. 19,000 shares. It's not too bad. We can crack through that, dude. We can crack through that. 19,000 is nothing. Dude, I've never lost 7 figures before. I mean, put in the chat if you lost 7 figures. I've never. I think the most I've been down like 400. That's probably, yeah, 400 roundabout. Now, not actually I didn't book it as a loss, but like I've seen the port go down that much. But 7 figures I've never seen being down that much. I did not vote my Tesla shares yet. I have to do that. Everyone, if you're in Tesla, probably needs to do that. Honestly, I've just been lazy about it. I haven't done it yet, but I do know that that vote is coming up, and it looks like, based on the stuff I've seen on Twitter, Elon's going to get at least 80% of the vote. I mean, people are pretty aggressively voting in his favor for compensation. So I would imagine it goes through, but I do need to do that. $400. No, but it wasn't an actual loss. It was just down like throughout a few months, and then eventually it came back. Just buy the dip. that's the retail. Oh, I'm down 400,000. Well, looks like it's the time to buy. But it worked, or it has worked, at least over the past couple of years. And as long as this AI bull market continues, hopefully that takes place. But I get that it's scary when you hear that, because it's like, what if it doesn't work? And that forces you to dig deeper into like, what stage of the cycle are we at? And maybe it's not 99, maybe it's 95. A decent amount of you saying you've been down 7 figures before. Decent chunk of you here. Yeah, dude, that's aggressive. That is aggressive. Vin said I lost 6, almost 7. Brandon said I had a 7-figure loss. I lost one. Did Brian say I lost 1.1 million before? Goodness gracious, bro. Vin said I took my house money and put it in a house. That's fair. Yeah, most people, I think, have seen 5 figures down in a day. But that is still ugly, dude. That is still ugly. Pretty close to 7 in April. Yeah, I think for a lot of people in April, that's when it was, most of the pain. I mean, dude, in April, I would imagine there were people that have been down multiple 7 figures. I mean, when you have a 30% drawdown on the S&P, like, especially if you're older, especially retirement accounts, I mean, you just saw those portfolios evaporate, and you just had to be able to buy the dip. Robinhood making its way back to 127. Let's see if we can crack 128 again. 127.30. IREN, dude, IREN's going for 49, 48.23, 48.79 it got to. Another 15% move on IREN. Yeah, Triple V is the best example. I mean, like, when I tweeted about this, people didn't believe me. He was down 90 million back in April. Like, I have the screenshot. I showed you guys the screenshot. He's down 90 million freaking dollars, bro. Like, April was, some people are down 400,000. Some people are down 1 million. Some people are down 50,000. He was down 90 million. everyone's like, oh, you're lying. I'm like, no, bro. Like, this is just like when someone has a portfolio that gets to that size, like, and there's a 30% move down, which means like 20 to 50% on individual names, especially the high beta. I mean, high beta was basically 70 to 80% on a lot of those names that we saw. Palantir got cut in half. Robinhood went from freaking 60 to 29. Like, yeah, that'll create a massive dent in the port. But he recovered. And now he's up a lot this year. But you had to just get through that. IREN CEO on Yahoo Finance at 11:15 Eastern. Okay, so we'll take a listen to. I've actually never listened to the IREN CEO, so definitely would want to hear how he's thinking about the overall data center space. Let's get an update right here on Alibaba and their partnership today with NVIDIA, and then we'll keep going from there.
Chip sales to domestic firms to speed up homegrown chip efforts. Progress in Beijing is definitely being made, but Alibaba says it'll still use NVIDIA's developmental tools in its cloud software and also integrate NVIDIA tools in its Alibaba robots as well as self-driving cars. This spending announcement, though, carried significant political weight. A source tells me China's premier toured Alibaba's facilities and was shown its custom PPU chip, which he was told outperforms NVIDIA's H20 on almost every metric. These inspection tours, though, are highly choreographed, and doing this publicly shows top-level confidence in China's ability to compete in advanced AI. Baba shares, you guys have talked about it jumping today at over 8% to their highest level in 4 years. The market reaction, though 9% right now, shows how strong the global appetite for AI is at the moment, and investors really seeking, any type of alpha. I saw one note just this morning saying that the valuations in Hong Kong are a lot cheaper, so you could see a pivot there. But investors are really betting on the level of spending will pay off, even as some.
They are a lot cheaper. The question is the CCP risk. But it looks like the cheap valuations mixed with the AI tailwind, along with Jensen probably brokering a deal with Trump and Xi to get them to sell Blackwell chips, which we have no confirmation on yet. Hopefully that happens by the end of the year. That is likely why people are going to be potentially rotating into China. And quite frankly, the rotation has happened already. Baidu, JD, Baba, all these names up 30 to 40% in the past month. So we've seen the appetite. That's not really slowing down. By the way, this is a screenshot for those that don't believe it. As you can see, it's a real screenshot, bro. 90 million. It's ugly for some people. It is ugly for some people when it gets that big. But again, for a lot of us, 90 million, metaphorically for us was the same, even if it wasn't literally 90. It was painful. But retail stayed strong. Retail stayed strong. All right, so what other headlines do we have going on? I think 1030 slam, we've kind of already experienced it, although we're getting a little bit of recovery. Hoodie 127.30. 51% of you say you actually don't deposit fresh capital monthly into the portfolio. I would imagine those that are younger probably do. Those that are older probably don't need to. But like if you're, below 40, I would imagine every month you're probably putting money into the port. But if you're above that, you probably don't have to do that every single day. Here are the Elon tweets I said I would show you guys. So Elon's actually pretty bearish Anthropic. So a couple tweets. Number one, here's the first thing he said about OpenAI. So again, this is the picture that's been going around. Everyone's been seeing it. OpenAI gives $100 billion to Oracle. Oracle gives $100 billion to NVIDIA. NVIDIA gives $100 billion to OpenAI. And then Elon said, big question is whether the infinite money glitch lasts until the infinite money genie AI arrives. So you do have Elon saying, hey, like a lot of this is nonsense and there's not that much money to be able to spend to even get to these levels, which is one argument. The other thing he said about OpenAI, when someone said, hey, what does this mean for XAI that OpenAI is ready to spend 10 gigawatts of computing capacity? Elon said, just as XAI will be the first to bring a gigawatt of coherent training compute online, we will also be the first to bring 10 gigawatts, 100 gigawatts, and 1 trillion watts. So you got Elon saying, hey, we're the first ones that had 1 gigawatt. We're going to get to 10. We're going to get to 100. And we're probably going to get to a trillion. And he still continues to believe that Elon doesn't have the money, or that Sam Altman does not have the money either. And then to top it off, he said this: winning was never in the set of possible outcomes for Anthropic, when someone tweeted that Anthropic is going to lose. Oh, it's terawatt, not 1 trillion watts. Okay, my bad. Terawatt. Dude, I saw the T. I said I thought it was trillion. Sorry, it's terrible. But you got Elon being pretty damn bearish around OpenAI. You got him being pretty damn bearish on Anthropic, which I don't know why the Anthropic hate is coming in, because Anthropic just 5x their revenues in freaking 8 months. So not sure why exactly he's thinking Anthropic's not going to do well. But the point is, he's pretty much on the side of the aisle that says XAI is likely going to be the biggest winner over the coming years, and not some of the legacy model companies that came before it. Now, my opinion is that all of them can win. This is a minute clip of Dylan Patel, the head analyst at Semi-Analysis, basically giving his projections for CapEx in 2026, and it's way above what the street is expecting.
Yeah, fair enough.
There's a lot embedded in their numbers now. But what's interesting is consensus for the banks is like for across like this, the hyperscalers. So Microsoft, CoreWeave, Amazon, Google, and Oracle, right? Meta, right? So it's the 6 hyperscalers, right? Who I would consider hyperscalers. The consensus for the banks is $360 billion of spend next year across all of them. And my number is closer to like, it's like 450, 500. And that's based on like, you know, all the research we do on like data centers and like tracking each individual data center in the supply chains, right? So this is just NVIDIA spend. This is CapEx for the hyperscalers, right? And then that CapEx gets split up across different companies, but the vast majority still goes to NVIDIA, right?
Paths forward for NVIDIA.
So he's estimating 450 to 500 billion of CapEx in 2026. A lot of that coming from the Anthropics, the XAIs, and the Openais of the world. But the point is, all of them are spending. So as much as Elon is saying that, you know, Anthropic and OpenAI are done, if they're not done, at least not in the next coming years, then NVIDIA should be benefiting from that, which likely will continue to create more momentum for these names. It's not too bad. It's not too bad. I made how much BM&R did you buy? About 50 shares. Did we get the bottom? BM&R. Okay, folks, maybe. Got 52.80. It's at 53. Didn't break 52.30 yet. Ethereum kind of holding stable. Yeah, about 50 shares today. I will see, dude. We'll see. If Ethereum goes below 4,000, this one's definitely coming down, but hopefully we don't see that pain yet. All of energy is up. Energy Fuels gives you exposure to rare earth and uranium, and the market is recognizing this. Seems like a solid play. I agree. I've not done a ton of work. Dude, I got to do a lot of research on these energy names, because right now it just feels like you throw a dart and any of them take off. So, yeah, Magusto, thanks for the super chat. The reason I think Energy Fuels is pumping is because when you have these many hundreds of billions being committed to AI data centers, you need energy. Like, it's really not that complicated. I know it sounds so simple, and it's like elementary analysis, but it's true. It's just like you need energy for all this stuff in the market's just like, okay, cool. What are the plays that need energy? And how do we allocate to them? I think there's a chart right here that also shows how much electricity demand is continuing to go up. And it's just not stopping. Yeah, let me see if I can pull it up right here. I believe Elon tweeted it, but it was just showing electricity demand like outstripping supply. Yeah, here it is. Well, this is electricity price. The average US city electricity price has gone, dude, this is like an exponent. This is like a stock chart. And we need to get those prices to come down. It's good. Energy is going to become unaffordable for the average American. The only way to do that is to invest in more energy infrastructure. And that's why I think a lot of those names are catching a bid. Lithium Americas, is that one up 100%? Wow, 101%, 155 million shares have been traded today. My goodness, dude. My goodness. Why is this not bullish for Tesla Energy? It is. Tesla's at 430 or 440. Tesla was stuck at 300 for the past 2 months. So I think there's a lot of reasons why Tesla's up. One of the reasons probably is a recognition of energy demand. So you can't say it's not priced in. I mean, Tesla has a lot priced in. But then some of these other names that are super small, right, like an Oklo or a Bloom Energy or whatever, these guys that are just not as well known as Tesla, they are starting to see that priced in as well. And then lithium matters when it comes to the energy revolution as well. Lithium America is right there, up 101%. So you have a lot of these names. Obviously, the Trump 10% equity stake is what's really fueling it, but still, those names matter. And then Intel, That one is up 5% on the day as well. Why access violation and not accounting for inflation? That's true. New IPO on Hood, Fermi. What the heck is this? Have you guys seen this on Hood? I haven't seen this. Fermi. FRMI. Texas-based energy tech company that is developing a hypergrid campus. Talk about the perfect time to go public, dude. I mean, this thing's going to be up 300% in a day. Energy tech. Okay, there you go. It'll get some buyers. They don't have the pricing yet. Headquarters in Texas. Looks like it's going to be IPOing on October 1st. FRMI. All right, so I've got to do a lot of work and look into this one, but I mean, an energy play seems like it's the best. Oh, is this a REIT? This is a REIT too. Okay, this is going to be an interesting. This is not just a tech company. This is a REIT. There's going to be a lot of elements to this one, especially given it's in that energy sector. FRMI. That's the ticker. FRMI. So that's what we'll be looking at. SLNH, this is another pseudo data center play. Solana Holdings, that's up 8%. It's up like 100% for the week. Again, small cap, 77 million, very, very small cap. But that one is also moving. Any thoughts on Enovix? So Enovix is a name we haven't talked about for a long time. I don't know if they're going to play a massive role in the batteries for the data center revolution. They're, to my understanding, building batteries that can exist on a headset. I know they do a lot of other batteries, but they're like Core Focus, which is the deal they got with either Apple or Meta. It's never been disclosed. Was batteries on a headset that can, sit in your glasses, sit in your VR headset, and like not overheat and all those different types of things. It's just kind of boring now, right? That whole narrative was exciting when the Vision Pro came out. Now it's just like, I don't know if people care that much. Management is very strong. Same management as Enphase. They've scaled companies before. This thing got to 15 in July. Now it's at 10. But one could argue they could easily pivot and, start to build more batteries for data centers, which, there's tons of demand there. But that one has been relatively flat. And it's been stuck. My stop loss took me out of LAC yesterday morning, and then this happens at 4 p.m. Yeah, dude, that sucks when that happened. Dude, yeah, after hours, we were doing Technical Tuesday, and we saw this news break, and it happens. It happens sometimes. Too many IPOs, top signal. Well, the IPOs have not done horrible. I don't think it's a top signal, but I do agree that it's not the best quality IPOs. I thought Klarna would do better. Remember Aero, that defense company? What was that thing called? AIRO, the drone company? Yeah, that's at 20. That's been a dud. Got all the way to like 50 at one point. I think most people are waiting for Anduril and like the real special companies. But they're not going public yet. Yeah, Bullish has done okay, which is not. Figma came back to earth, which, I was talking to one of the VCs that initially funded Figma, and it was hilarious. Andrew Reed, when I was at the Sequoia office, and what Sequoia does is that when they take a company public, they hold on to the stock and they just leave it for a long time. But Figma was at 150. And Andrew is best friends with Dylan, who's the CEO of Figma. And he was really regretting going up to Dylan and telling him that they're going to have to sell some of their Figma because like the responsible thing to do if you're a VC is like, you got to take some profits. But then the stock fell. So he was actually kind of happy about it. He's like, we did not want to sell because we love Figma. But now that the stock came back to normal, we can hold on and hopefully have this get back to 150 in a more mature way over the next decade. So, even the euphoria was affecting the VCs. So we're like, dude, do we need to take profits here? Like, this is getting ridiculous. But then it came back to normal. I mean, even my dad sold 20 shares at freaking 135. So it's like some of these names coming. And that's the difference between this and in 2021, Figma lasted for like a few weeks in euphoria. In 2021, it was a year of euphoria. And that's just not what we're seeing right now. I mean, like, if you can't, and Figma had a good earnings. It wasn't a great earnings, but like, if you can't put up a good earnings, you get hit. It's just that simple, which I think is good for, a lot of these names that need to actually justify some of their momentum. which is not so bad. EOS Energy, this one, again, I got to look into it, but this one also has been making a bit of a move. That's up 8% on the day. Again, if you have energy associated with your name, I mean, you're getting the benefit of the doubt. And it looks like that's not slowing down. Let's hear from the ARM CEO on all this AI infrastructure investment and get on what he thinks is going on as well.
The money that's going on obviously was announced yesterday with Openai and SoftBank and Oracle, of which we're hugely proud to be a part of. The demand curve still appears to be, rather insatiable. And one of the key indicators we look around that, Jim, is that while ChatGPT and these models are getting very good at solving things like the bar exam and software experiments or coding contests, there's still a lot of problems that AI cannot solve. When you think about drug research, cancer research, unsolved problems, what's called open-ended AI. In other words, you're trying to use AI to solve problems where their answers are not yet. Those require lots and lots of training, which require lots and lots of GPUs, which require lots and lots of power, which require lots and lots of capital. So right now, I think we're still on this demand curve that seems to be still climbing.
Well, Renee, you can help because you're close to Jensen Huang too. I mean, there is this kind of theme underlying it, which is that you write a check to Jensen Huang. He's the guy who makes all the money, that maybe there won't be any real payback. Yet when you speak to Jensen, as you know, he talks about almost instant payback. Could you give us the state of play here?
Yeah, as you said, they're a close partner. Jensen was just in the UK last week. I was here. We announced a lot of big investments here in the UK. The next generation data center that NVIDIA is going to be putting up uses the next generation ARM CPU that's going into Vera, strengthening the ARM partnership with NVIDIA in the cloud. And similar to what we're seeing, the GPUs and, of course, powered by the ARM CPUs is really driving a lot of growth here. As far as how the money kind of flows through the channels, obviously, this kind of financing requires a lot of creative ways to go off and get it done. So while I don't have all the details of this $100 billion financing deal, you're looking at lots of unique ways to go off and solve this problem because their capital required is so staggering that we're now looking at ways we haven't looked at in the past to finance the builds. But I'm pretty...
Now, the bears will say the quote-unquote special ways of financing is a bubble. And it makes no sense, very reminiscent of .com era. The bulls will say, no. The build out is so aggressive. It's so advanced. It's so, quite frankly, unbelievable in terms of the amount of computing capacity that we need, that you have to have these creative ways of financing. And the sort of core differentiating variable is there an ROI on the financing, which is why the ARM CEO just said that Jensen, immediately says, as you get these chips, there is a return. So it's not sort of this $100 billion being passed around within the same 3 or 4 entities. There's hundreds of entities at this point, if you include all the sub-vendors and energy players and data center players that are not just the NVIDIAs or AMDs of the world, that are taking part in this pool of capital that's being thrown around back and forth with the understanding that an ROI will occur. Not to mention all of this. At the end of the day, all of this, or at least 90% of this is being subsidized by big tech's free cash flow. Like the money that Nebius got from Microsoft for $20 billion, that's coming out of Microsoft's free cash flow. And Nebius gets to do what Nebius needs to do to make that $20 billion turn into a lot more for shareholders. But if Microsoft did not have a business model that would allow them to be able to generate that type of free cash flow to then deploy into a smaller company like a Nebius, there would be no Nebius and there would be no AI revolution. But you have the big tech companies with massive balance sheets that are ready to put this money to work. And as Zuck said last week, if they don't put this money to work, what are they going to do? Like, they're not just going to sit around and collect 4% from a money market fund. So you've got to be in it to win it. Really, to be ballin', you've got to be all in. You know what I mean? And I think that's what the big tech companies are thinking of. I think that's how they're navigating it. Oracle is using debt now. Well, that's true. Oracle did file for $13 billion of corporate debt today, but their stock is doing so well. Why wouldn't you raise corporate debt here? You raise corporate debt when there's massive excitement around your company, when the broader investment community seems a runway for renewed growth, or at least reaccelerating growth. And with Oracle's 400% RPO growth, you would imagine their corporate debt, it seems more secure than other debt that's out there. because it's not like Oracle's going out of business. If anything, Oracle's probably going to do very well over the next 4 years. So raising that corporate debt to me makes sense. Obviously, it's hurting the stock right here, but that also isn't bubbly. That's just them taking advantage of the fact that now one could argue, well, they pumped the stock so high based on this RPO number that's not necessarily recognized revenue, and that's how they're able to get the demand for the corporate debt. That's fair if their RPO number ends up being fake, which hopefully that would not be. Bro was waiting to use that Twitter meme. What are you talking about? That was off the dome. That was off the dome, bro. That wasn't a Twitter meme. That wasn't this picture that I saw randomly yesterday. They copied me. They copied me. I'm just telling you, like, that picture was posted just now because of me saying that, and then they made a meme out of it. So it is what it is, bro. Your boy's a trendsetter. Your boy is a trendsetter. Tesla 439. Tesla 439. Sachin says Oracle cash cleared puts are not that bad. I would say decent premium given its size, and especially after the TikTok deal. I've never looked at Oracle cash cleared puts. I would be curious to see how they're paying. Let's do a basic. What's that? 306. Let's do 1 month out, October 24th. Let's do 295. No, let's do a better delta. Let's do 280. That's a 25 delta. 765 above 28,000. Yeah, it's 2.5%, 2.7 on a 0.25. If we did a 300 put, that's 1525 divided by 30 grand. That's 5%. If you're okay with buying Oracle at 300, you can get an adjusted cost basis of 285 and get 5%. Now, granted, 300 is pretty close, but not horrible. Bitcoin making a little bit of a move right here, along with Ethereum. Bitcoin 113.8. All right, you got a green candle. You got some sign of life. Hoodie's moving on that green candle, trying to break 128. Is ETH moving as well? ETH is moving, 42. 42. And then what's the other one? BMNR, is that back at 54? That's back at 54, baby. All right. So you're getting ETH trying to crawl back, hopefully, into the 45 level. Wow, Nebius, all-time highs. Congratulations, 112 to those who are in Nebius. Even if you bought at 90 after the Microsoft deal was announced, this one's still making its move. IREN is at 48.83, 17% up, very close to 49. And Cypher not stopping either. That's pretty incredible, dude. It's pretty freaking incredible. Triple V 333. Triple V, thank you for the $200 super chat. I think this is our Triple V. I think, unless this is a new Triple V who made their name Triple V 333 VVV. But if that is our Triple V, then thank you. Even if it's not our Triple V, thank you again for the $200 super chat. Meta, Mark Zuckerberg says Instagram is going through 3 billion monthlies. Wow, that's a big one. That was at 2.7 for the longest. There you go. That's, dude, Meta, by the way, Threads has ads in it now. I was looking at it the other week. So they are monetizing Threads. 3 billion monthlies on Instagram for Meta. That is not that crazy. Or actually, that is pretty crazy compared to the fact that it was at 2.7. But it's not that crazy when you think Meta has 4 billion people on their planet, or off the planet using their platforms, which eventually will be 5 to 6 billion. That is pretty damn incredible. There you go. Meta 756, AMD 160, Hoodie 127. Again, the data center play is just not slowing down. IREN right there, 49. There she goes. She wants 50. She wants 50. I identify as quadruple V. I think that's our triple V because it's the same green V from the previous super chat. So I think that is our triple V. So thank you, Mr. Triple V, for being here. And thank you for the super chat. Nick, thanks for the super chat. Hey, Amit, have you ever used option collars to de-risk your portfolio? You know, I am still learning about iron condors and butterflies and all that stuff. I've never really utilized them. The most that I've done is covered calls and puts. I mean, I've done spreads on the buying side, not really on the like hedging protection side. but I am curious about learning a lot more about them. I mean, the basic concept is not that hard to understand, right? You create a certain range for the stock to be in, and as long as that stock is within a range, you profit. So it's not like some massive 2-3x. It's also not like 2% in a week off of an aggressive covered call, but it is a range where if for a month you think S&P is going to be between X and Y, and you can create that range for yourself, you can still make a profit. So I've never been heavy in those, but yeah, they are definitely useful strategies to hedge the portfolio. S&P still is red, even with Reddit going green, Coinbase going green, Tesla staying green, and IREN just exploding. Nebius, are we breaking 112? We broke 112, 112.19. 112.19. Nebius, yeah, they got the price target increase to 200, 206 this morning. Galaxy is a big one as well. Galaxy's at up 7% on the day. Do you guys know Mike Novogratz of Galaxy? I think we've heard him a couple times on the channel, or we've heard him like on CNBC. That guy's an animal. And this is also like a Bitcoin trading crypto brokerage, but they are also using their mining facilities for data centers. And so that one, another big name that's part of this race. I mean, dude, it's just like any one of these names, if you bought in early August, you're up like 30, 40%. A lot of these, much more than that, which is not easy to happen in an entire sector without it being seen as a bubble. And that, you know, the jury's still out on that. But if it's not, then these names are going to create a lot of wealth for a lot of people over the past couple of weeks. You're seeing some momentum there. Orbs, that is up 5% as well. I don't have a position in this. I kind of just have my exposure through Bitmine, but that one is up 5%. Sachin says, I sold cash grip puts on AMD, Datadog, Nike, still waiting for Oracle and Amazon to fill. Datadog, AMD, and Nike. All three of them have been weak for the past month, so it makes sense to benefit off some of that volatility to the downside. Amazon, I don't hate puts here at all. I really don't. 210 puts, 200 puts. I do not hate that. And Oracle still down 3% on the day. Kendi says, I trimmed like 75% of my Oklo. Either that's going to be really dumb if this thing is going to 200, or it's going to be really smart if this thing is going back down. Either way, a profit is a profit. But it's one of those things that's crazy, right? Like Oklo, theoretically, like you could see this thing just, you get one crazy deal, some random new nuclear facility starts, Trump invites them to the Oval Office. You can see this thing explode. But it's also like you could easily see a tank, right? And it's hard. So I don't think it's crazy selling 75% and just letting the other 25% ride. I really don't think that's too crazy. Shout out to Farzad in the chat. Is anyone super bullish Amazon for the next 5 years? Yeah, Farzad commented under my post yesterday. I typed in Farzad on Amazon. I mean, like, humanoid robots is something we don't talk about either. Amazon's probably not going to buy the robots from Figure or Tesla. They're probably just going to build them themselves. And if they do have to buy it from Tesla, that means, you know, they've calculated the unit economics on the ROI, and it's probably way better than what the analysts think, which is going to allow them to continue essentially replacing humans with robots that are going to be way cheaper. And the biggest red flag on Amazon every time is their margins. Well, if humanoid robots, or just robotics in general, it doesn't have to be humanoids, increases margins, that's a very simple growth story for Amazon. Like, increasing your margins is one of the easiest ways to get your stock to go up, because that increases your net income. Theoretically should increase your price earnings if you have more profits. You can get the stock to pump. So I don't think that is crazy. But we have to see if that plays out. How much do you think the Bezos selling overhang is dampening Amazon's performance? I don't think it's that. Dude, I know Bezos has sold like 15 billion in the past year, but I don't think it's because of Bezos. It was because of Bezos when it was stuck at like 190 to 200. There was the meme that every time it got to 200, he sold, which he did. It was a legit wall. But this is not a Bezos story anymore, in my opinion. This is the AWS is boring story, and tariffs actually has an impact on them story, which could be resolved. Now, granted, if Bezos sells, if you break out to 235, it's definitely going to be annoying. But I don't think that's the core reason why it's stuck. And dude, didn't he just have the wedding? Isn't he done selling? Like, he sold 10 billion at a $50 million wedding. I feel like he should be done. Why in the world would Amazon start manufacturing? Well, why in the world does Amazon do anything they do, right? Like, Amazon is a company that has their tentacles in every single place you can imagine. I don't know. Would it be easier for them to buy the robots? Yeah. But Amazon loves to do things themselves, especially when it comes to vertical integration. And it's not like Amazon doesn't have an experience with robotics. I mean, Amazon and robots is pretty damn, it's a pretty damn long relationship they've had for the past 15 years. There's tons of robots already. Let's ask Gemini, what percentage of Amazon factories have robots? 75% of Amazon's global deliveries are assisted or created by robotics in some way. Wow. 1 million robots across its network of over 300 facilities, and 75% of every delivery ends up being assisted by a robot. Yeah, I don't think it would be crazy for Amazon to get into like building robots. Now, again, it's going to take a lot of time and effort, and that's definitely going to hurt their margins doing it. But do they want to give Elon $1 billion worth of orders of robots? Probably not. That might cause them to do it on their own. I mean, dude, none of these hyperscalers want to buy from freaking NVIDIA. They all hate NVIDIA. Like, none of them like NVIDIA, but they have to pay the NVIDIA tax because, you know, like, what else are you going to do? But if these guys could get away with not having to pay NVIDIA, I think they would love to do that. It's just they can't. Now, Google's trying with TPUs, Amazon's trying with Trainium chips, but they have to pay the NVIDIA tax. By the way, buybacks, Apple, this is the largest buyback out of all of the Mag 7. NVIDIA's at 60 billion, Alphabet's at 70 billion, Apple's at 100. I wouldn't be surprised if Google raises that 70 billion going into this quarter. NVIDIA's probably not going to raise it because they already invested 5 billion in Intel, but Apple still has, what is it? I mean, they still have 25% of their buybacks to do this year. If they've done 75 billion so far, they have another 25 billion, which definitely could also help the stock. They give China hundreds of billions. Yeah, but they give China hundreds of billions for commerce, right? Like, they give China hundreds of billions for cheap shit because they can sell it at a premium. Like first of all, I don't think Amazon wants Chinese robots because I think there's a security threat there. So the cheaper humanoids from China, I don't know if they would want to engage with, which means they're going to have to pay a premium for Tesla robots. So then there's just Bezos really want to give Elon billions and billions of dollars every year reoccurring for those robots. I don't know. I mean, you would imagine, and Amazon, by the way, has already tested their own humanoid robots. It's not like they're immune to working on this stuff. And they've been developing this stuff for a long time. It's just, I don't know if it's going to have the type of AI sophistication that Optimus would have. But there is a legitimate argument to say Amazon does not want to fuel Google or Tesla's balance sheets by buying robots from them. Google, by the way, working with Aptronic, if they buy Aptronic robots, that would be just helping Google. So maybe they do it themselves. Robinhood 128.50, BMNR 54.70. All right, BMNR goes green. And Robinhood trying to make its way to 129. I don't think Amazon necessarily wants humanoids. I went to an Amazon fulfillment center and saw robots pack items in a box within a few seconds. Well, that's the other massive bear case to like Tesla or Aptronic getting this big purchase order from Amazon. What if Amazon just doesn't need humanoids? What if Amazon can just use their robots that have regular robotic arms to do most of the packaging, and they don't literally need a walking robot in the factory because the actual robotic arms they've deployed over the past basically 15 years are good enough? I mean, then it's just like they don't need humanoids at all. But again, a company like Walmart, I don't think can do that because Walmart doesn't have the tech that Amazon has. Walmart doesn't have the types of robotics that Amazon's been working at. Walmart would have to legit buy humanoids, at least I think. Same thing with UPS, right? They would have to actually get into a deal. But I feel like Amazon's in a different stratosphere when it comes to robotics. Hoodie, let me check 129 resistance. Bitmine 55. All right, so it looks like 52. Hopefully was the worst of it today. We'll see. Hoodie 129. Let's see if we can break through. Yeah, Walmart also uses Symbotic, which is important. 129 resistance on Hood is 8,000 shares. 8,000 shares. It's not a lot, bro. It's not a lot. Humanoids will be huge for Amazon for delivery to and from delivery vehicle that will be driving itself. Okay, that is an interesting argument. Like the delivery vehicle drives itself and then a robot comes out of the vehicle to theoretically deliver it on your house. I mean, if they were to replace the delivery drivers and the delivery process with self-driving and humanoid, that would be kind of crazy. I mean, I can't even imagine. But then again, if you use a little bit of your imagination, like when I'm walking around the streets and I see these like serve robotics things that have people's Uber Eats orders in them the whole time. And it's just like, it's like navigating traffic. If you walk in front of it, it'll stop for you. Like it is kind of crazy how much Uber Eats is now being autonomously delivered. Which, who knows, maybe one day that's done on Amazon in general. Nebby is still moving. Robinhood again, 128.80. It's trying. It's really trying for 129. We got to see. UNH, is that one still moving? Palantir's down a little bit. Tesla still up 3%. UNH is 349, just below 350. SoFi still below 30. Grab 632. Google 249. Hoodie's trying to do it. Here we go. 128.95. This is the moment. This is it. Let's see. IREN CEO not live yet. We'll switch over when they're live. Here you go. You got 3 cents. You got 3 cents. Let's see. There it is. There it is. 129 on Robinhood. Also 112 for Nebius. We got to ring the bell for both. Congratulations, everybody. You got new all-time highs on Hoodie and on Nebius. Neighbors have not complained yet, but eventually I expect them to. But it's okay because we got a 129 move on Hoodie. Dude, if we hit 130 today, if we hit 130, Nebius 113, well, I guess that bell was for 113 as well. Goodness. I think it hit 113 while I was ringing the bell, dude. My goodness, that one's moving. 130 resistance on Hood, 30,000 shares. And for Nebius, let's check 114. Nebius 114 resistance is nothing, bro. It's 2,000 shares. That's I mean, like that should be able to cut through 114 easily. Easily. Goodness gracious, dude. We are seeing some real momentum here. Tesla right here, 439, but it is also selective momentum. S&P still flat. Hoodie and Nebius are moving. Tesla's moving. Everything else, not really. I mean, Bitcoin and Ethereum waking up a little bit, which is helping BM&R. What about MicroStrategy? BM&R 5450, MicroStrategy 335. That's up 2.3. IREN, did we touch 50? IREN 4865, just below 49. I'm able to look at resistance amount because on Robinhood, if you pay for gold, there's a yellow button that you can press right there. You press that yellow button, that arrow, and then you can see all the resistance right there. A lot of other platforms have it. Webull has it in different ways. I just use Robinhood, but yeah, there's a bunch of ways to get the NASDAQ level 2 order book flow. For me, I just use it on Robinhood. BABA, that's still up 10%, 179. And then you got Tesla 3.7. Let's see if we have any other macro headlines. It's 11 o'clock. We got through 10:30. Trump promises Arab leaders that he will put an end to the war with Israel and Gaza. Okay. I think Trump's still in the UN right now. So he's talking to a lot of these leaders. Kathy Wood says AI reduces the need for hiring at ARK. Kathy said that AI is allowing the firm to run leaner. I mean, we're seeing that from a lot of other companies. Seems like those are the main headlines. And then Iran said that we will never seek nuclear weapons. I don't know if that's necessarily the truth, but nonetheless. Microsoft partners with OpenAI rival Anthropic on AI Copilot. Oh boy. Okay, that's actually a headline. Microsoft and Anthropic, huh? Yeah, there you go. Microsoft is bringing Anthropic's Claude Sonnet 4 to Copilot. Now, look, this is not that big of a deal because like all of these hyperscalers work with everybody. So obviously Microsoft would, if people want to use Claude, they want to offer the ability for them to use Claude on Copilot. They don't want to like artificially restrict you just because they have a deal with OpenAI. But it does go to show that the hyperscalers, they do not care about a single LLM. They just want to be the platform that allows people to work with all of them. Now, I wonder how Sam Altman feels about this because he would probably want people to be using GPT-5 instead of Sonnet 4 on Copilot. But that is green. That is green for Microsoft right now. Nebius, are we at, oh my, Microsoft just went green. Dude, Nebius, shout out to Nate. Nate's got to be super happy about this. 114 on Nebius. Stock was at $40 2 weeks ago, dude. It's a big move. Big move. Muckabee, thank you for the $50 super chat. Buy your neighbors a bell so they can join in on the Pouncer Hood party. Let's go, IREN. It's a good idea. That is a good idea. If they complain to the building, I'll just tell them that I got to get them a bell. Goodness gracious, bro. Nebius right there, 114. Muckabee, thank you again for the super chat. I know he's heavy in IREN and Cypher. So it's got to be a good morning for you. Dude, if you're heavy IREN, Cypher, Nebius, you are not working right now. You're absolutely not working right now. 17% on the day. I believe the IREN CEO will be on Yahoo Finance in a second. So let me pull that up and we can see. Now, if I'm the IREN CEO and my stock is up as much as it's up, not just based on hype, but based on real momentum around people, data centers, in this interview, I lean in heavy and I like really make the argument for why IREN is going to be one of the massive players in data centers. This is the moment where you get a lot of new people to be excited about it. But we got to see what he says. Let me see. Is he live already? Let's see. Let's pull this up. I think he's almost live, if not in 2 minutes. That is green. IREN right there, still up 15%. BM&R, that one's still green. SoFi just went green. Okay. IREN 48.93, Intel 30.76, and then Hoodie 129.20. All right. Just making a little bit of a move. Making a little bit of a move. I think this is him. Let me see. Let's pull over to this. Let's see if he's live.
Build out. Joining me now is Daniel Roberts, IREN CEO.
All right, here he is. Let's see.
IREN is a developer, owner, and operator of data centers powered by 100% renewable energy. Obviously, you know a lot about what's going on here in this build out that's happening, Daniel. Talk to us a little bit about the company and what you're seeing across the landscape here as we see all of this money just being poured into data center build out.
Yeah, look, IREN, thanks for having us, Julie. IREN was founded 7 years ago by my brother and I, and our thesis was that we were the fourth industrial revolution. We're going to see the digitization of society, the emergence of all these high-performance computing applications, and that essentially the legacy data center industry located in metropolitan areas just wasn't geared up to satisfy the large amounts of power and capacity that this digitization thematic would require.
And at the time, you know, generative AI was not yet happening 7 years ago. So you guys, like many in this business, sort of have, do you still have any Bitcoin mining? I know that was something that you were in, and we've seen a lot of conversions or additions broadening into Gen AI. How's that path worked for you all?
So the same data centers that we built 5 years ago to mine Bitcoin house NVIDIA GPUs today. So we never went down a crypto pathway. We built the data centers from day one capable of supporting these applications. And the whole idea was to bootstrap the platform using Bitcoin. So we sell the Bitcoin daily, we pocket the cash, we reinvest that, and then layer in higher and better use cases over time as they emerge. We signed an MOU with Dell back in 2020. It was a bit early. But then the AI boom took off a couple of years ago. We bought some NVIDIA chips. And at the moment, we're rapidly swapping out racks of Bitcoin mining ASICs and replacing them with the NVIDIA GPUs.
Have you seen any mitigation in demand, any slowing down? I mean, are you able to even keep up with capacity, demands on what you guys are trying to do?
No, it's accelerating. And it's a demand and a supply game. And we're in this fortunate position where we've got 800 megawatts of data centers already built, which we are backfilling rapidly with the NVIDIA GPUs and replacing these Bitcoin mining ASICs. And the supply side, it is hard to bring online these data centers. We built 600 megawatts in 18 months, but the time to power narrative is real. The choke point is getting grid-connected power. And the benefit of grid-connected power, as we were talking about off air, is that you are connected into a network where the utility guarantees you 24/7 reliable power, and being able to build uptime guarantees and reliable GPU services requires that.
So if you talk about that renewable energy is powering the data centers, but yet it's connected through the grid, I mean, isn't there downtime that then supplemental energy is going to have to come from other sources? Because if you're looking at just wind and solar, is that what we're talking about?
And a bit of hydro, yes.
And hydro, does that provide 100% of the time the power needed?
It does. So the way it works is the utility underwrites that variability of renewable energy generation. So this is why, and partly why it's so hard to get connected into the grid, because the moment you plug in, the utility underwrites 24/7 reliable power. So the grid network in its whole is a melting pot of different generation, wind, solar, hydro, that all goes into a supply profile. The utility's role, who owns the transmission network, is to manage all that out and allocate capacity to people, generally on a first come, first service basis, based on how much reliable capacity there is.
So what happens if it's first come, first serve and you're further back in the line? How do you guarantee that you're getting that power?
You can't. You don't. And this is the whole issue. If you're starting from scratch today and you want grid connected power, you are looking 2030s.
Oh, wow. Okay. But you guys have these agreements already. And so that's why.
And this is the whole thesis 6 years ago. And a lot of it comes down to this dislocation between the real world and the digital world. So the digital world is your revenue line. It's your demand drivers. These demand curves that go vertical overnight, but your ability to service these growing exponential industries is constrained by the real world. And the real world can scale exponentially early on, but then it gets harder and harder. We've hit this inflection point where it's really hard for the real world to scale. And as we're seeing all these digital exponential applications, their growth is just continues to go.
So another aspect of the renewable energy demand is that from a sort of cultural policy, political perspective, the demand for that kind of energy is waned, right? We've seen a different administration that is deprioritizing that. But clients, do they still want that kind of energy?
Absolutely. The preference is for renewable energy. And our whole thesis here was to go to the source of low cost excess renewable energy and digitize it, convert it into these digital commodities. It's modern day aluminium smelting in a way, where that industry was born of going to low cost energy, monetizing that into a commodity and exporting that. The difference here is you can export it at the speed of light via fiber optic cables.
So as I was reading into the company and trying to wrap my head around it, and for investors out there who are looking at IREN, you've got some other companies that own data centers around. I think of CoreWeave as a prime example, a big visible example. The renewable energy is obviously one differentiator. How else should people understand IREN compared to some of the other companies out there presently?
The key is our asset base. So the way we're described is as a vertically integrated neocloud. The difference being that we own the entire stack. The land, the access to power, the substations, the data centers, the compute.
You're not leasing it.
We're not leasing it. And that allows us to deliver lower cost to customers, higher performance, longer term resilience, because we've got that certainty. And the best thing today is we're only using less than 2% of our energy portfolio for GPUs today. So the growth ahead of us, particularly in West Texas, is really exciting.
All right. Do we like it? What do we think? Hoodie trying to go for 130. She's really trying. I like the accent. You guys know me. I like the Aussie accent. So that in and of itself is a +1. Yeah, I mean, look, it's worth doing a deep dive. It's worth doing a deep dive. Obviously, the stock has made a big move. I don't know if buying at 45 is like the best price. It's up freaking 500%. But it's only a $13 billion company. I mean, could this become a $45, $50 billion company in a couple of years if the demand really is that exponential? I don't know. But CEO, definitely good vibe. It seems like he's pretty confident. It seems like he has the vision for a long time, even if there was a different use case. And it seems like he also understands how constrained the computing capacity is and where they can fit into to solve that. So it's definitely worth going a little bit more deeper to see. There you go. IREN right there at 49. Hoodie trying to go for 130. IREN's at 48.02, just below 49. Duolingo down on the day. S&P flat. NVIDIA flat. Not sure why Hood's actually moving, to be honest. I'm not sure why. I mean, crypto's relatively flat. High beta's flat. S&P's flat. So maybe it's just people jumping in on the S&P stuff, but that happened a couple of days ago. Maybe there's an announcement coming out later. I don't know. But you got Hood trying to make a move. Dude, the accent is legit, bro. The accent is great. The Australian, New Zealand, and British accents have always been my favorite accents, especially the Aussie one. You saw how he said aluminum? He was like, what do you say? He was like, aluminium or something. Like, even the way he said aluminum, I was like, oh, I like that. I like the creative interpretation of pronouncing some of these words. Aluminium. Yeah, he said it in that way. Metrics we don't get for Hood until, I mean, we already got August metrics. We don't get September because that's the last month. So, I mean, we're going to get some September metrics towards the end of towards the beginning of October, but yeah, there's not because of metrics. I don't know. I think people are just piling in, but it's weird, bro. Usually Hood moves with some type of catalyst. This could be just kind of FOMO. It could also be that. It could be the price target from yesterday, or it could just be people want to get more exposure, but there's not a trend I'm seeing outside of strength creating more strength. Bitcoin right there, 113, Ethereum 4,100, ASTS at 55, and then MicroStrategy 334. It would be pretty cool though to see a 3 handle on Hoodie, dude. That would be 7 to 130 in 2 years. That would be pretty freaking cool to see the 3 handle on 130. Yeah, the next Misty dividend is $1. It's $1.01. I don't know, dude. I think people are just bored of Misty. They're just bored of it. BM&R is more exciting. So dude, I have 500 shares. I mean, it's not something I pay that much attention to, but even that money being in BM&R, I feel like could do better. So unfortunately, MicroStrategy is just not really. Now, again, if we give Bitcoin some time towards the end of the year, that probably helps MSTR. But as of now, yeah, the volatility mojo is kind of just. Oh, there was a chart I was going to show you guys. Yeah, look at this. BM&R is doing 2x the trading volume of MicroStrategy. I mean, come on, bro. There's a new kid in town that people are excited about when it comes to the treasury plays. It's not just strategy anymore. It's Tom Lee. And I think that's what's getting people excited. Robinhood 129.70. All right, let's see. 30 cents. Got about 10,000 shares. The most traded stocks today in the options market: Tesla, Opendoor, Nvidia, Intel, Apple, Baba, Micron, AMD, Amazon, JD, IREN, iBit, Rigetti, Riot, Palantir, Rocket Companies, Lithium America Corporation, Rocket Lab, Oracle, Marathon. So these are your top 20 stocks that have been traded in the options market today. 129.80. Got 20 cents. Got 20 cents. Here we go. Here we go. Let's see. Let's see if we can get it. Any idea why the 3D printing stocks are up today? I have no idea why they would be up today. 3D printing, I mean, that's a sector I've not looked at in a long time. Do data centers need 3D printing or something? I don't know. I really don't. The thing is, when you have this much momentum in the broader markets, you're going to have a lot of different sectors catch a bid. And, it's the investor's job to figure out, hey, is there a real bid or is there not a real bid? Like, is this BS or is this like something important? And that's what we have to see. Swift, thank you for the gifted 5 memberships. Appreciate you. Thank you for being here. And thank you for the gifted 5. Amit, what are your thoughts on Palantir 215 calls for October 17th? I personally think 215 October 17th is okay. I don't know if it goes from 180 to 215 in 3 weeks. So I think you're all right on 215. There's no earnings in the meantime either. So yeah, I wouldn't have 215 after earnings because if they have a really good earnings, anything could happen. But I think before earnings is not horrible at that price. Most degen question ever. Anytime something's running, it's like, oh, what's the connection between that and data centers? That's what everyone has to ask. Josh, thanks for the $20 super chat. Long-term, both can win, MicroStrategy and BMNR. I agree. I'm not bearish MSTR at all. It's just the data shows the trading volumes are starting to shift towards BMNR when it comes to the treasury sector. But obviously, if you're bullish Bitcoin, MicroStrategy has the most Bitcoin. They're going to keep acquiring more Bitcoin, and that's likely going to naturally elevate its premium. It's just short term. I mean, people really are excited about Ethereum right now. Yes, I'm still in November calls. I still have November 60. I was going to roll it, but then BMNR went to 52. So I'm like, all right, it's got to force me to roll it. It's got to get to like 65-ish for me to roll. And I'll probably roll to 85 February's, but I mean, as of now, it's still under that price. I think 3D printing is going to be very important for humanoid robotics. Maybe that could be the reason why it's getting some love. Yeah, I've not looked into those 3D printing stocks in a long time. Any thoughts on ASST long-term? So this is Vivek's fund, right? I don't know. I know they just did a merger with Semler Scientific. Dude, see, I'd buy MicroStrategy over all these like little small Bitcoin treasuries in a heartbeat. I mean, like at the end of the day, I do trust Saylor a lot more than a lot of these other people. I don't know. I think Saylor has the ability to raise capital in an environment that's good and an environment that's bad. These other guys, I don't know. And they also have a lot of other, things they're doing with Bitcoin. Saylor's just, hey, we're just going to buy it and that's it. Like that's his plan. And that's a pretty simple methodology to understand. Up, Hoodie, are we going for it? $129.99. We have not touched it yet, folks. We did not touch it. $129.99. It did not touch 130. It did not touch it yet. We're looking here. Literally $129.99. Let me check another source to see. Yep, $129.99 on Webull as well. All right, so you guys can let me know on IBKR or the others. Maybe it touched it on some of the others, but we got to see it break through 130. Yep, Yahoo Finance also $129.99. All right, so this is the moment for it to make the move. This is the moment. Yep, Yahoo Finance has that $129.99. It's now or never. It's now or never. This is the time. She wants it. She wants it. And she got it. 130 for Robin Hoodie from $7 at the lows of 2023. She has made her way back. New all-time highs, $130. Congratulations, everybody, on Robinhood. Dude, that's cool. That is cool. There she is. Oh, I got to get a screenshot of this. 130 in all of her glory. 130 on Hoodie. Dude, my price target end of year was 120 on Tech Bros on Monday. We were like, well, 130 to 135 is possible. And there you go. 130. Dude, imagine if it consolidates at 130. Like it legit, like 130 becomes like, all right, now we're talking about 134, 135, and maybe comes back to 132, but 130, like it's going to be hard to see this going below 120 again. Obviously it's possible, but like it's really made a nice base in the 120s after S&P. Maybe it stays there in 130. Shout out to Tanner. Saw the milestone and had to pop in. Thanks, Amit, for getting me into Hood. Tanner, thank you for being on the journey, man. It would be quite boring covering this whole thing without having friends in it. And Tanner, you got me into NVIDIA. So deeply, deeply appreciate your friendship throughout this. We got a lot to talk about next week on Tech Bros Weekly, but it's breaking through a lot of price targets that we had. And I think that's primarily because increased growth expectations. This one, I think, is based on the Piper Sandler upgrade to the prediction markets. And that's likely what's getting them excited. Josh, thank you for the $20 super chat. I missed Hood, but congrats to everyone. Well, Josh, you have done very well on SoFi. So, you stuck through that conviction when it was, I mean, dude, I have a lot of respect for the people that held their SoFi in the midst of Hood basically going to 100 while SoFi was stuck at $10. I mean, that's kind of how it played out. And this is Josh's position right here, 250,000 shares. He's up 5 million. So, when you miss a high flyer and you have conviction in basically a name that is a competitor to that high flyer, even though they are different businesses, and you hold on even while the other ones go into the moon, it's tough, dude. You got to have the mental stability to not sell out of the loser, which was at the time the loser. Now it's a massive winner, and stay convicted. And I think that's even more impressive, quite frankly, to hold those 250,000 shares at $7 when it got to 15 and Hood was at 70. That's hard to hold on that much. But if you do, you can be up $5 million. Look at that. 75% SoFi. This is you talk about bullish Noto. Our boy Josh was freaking bullish, dude. It's also the beauty of the stock market, right? You pick a name, you go either all in or close to all in, and it can work out. And then every dollar SoFi goes up, there's $250,000 added to the account. Now, obviously, getting all the money to be able to buy those shares in the first place is the hardest part. But the beauty of compounding is incredible. Congrats, everybody. 130 on Hoodie. 130. This is incredible. This is dope. The other reason this is cool is because, again, it's just so many people have hated this story. Dude, I know we're all really supportive of Hood, but when I see some of my Twitter comments when I talk about Hood, I mean, the amount of people that just despise the company, hate the valuation, this and that. It's not as bad as Palantir, but it's still pretty freaking aggressive. And that to me, shows that there is some alpha. Let's check 131 resistance if it's really going to have some fun today. 131 on Hood, 2,000 shares. 2,000 shares, which is not too bad. Not too bad. Yes, Josh also uses Android as well. 250,000 shares is a lot, bro. It's a lot of SoFi. All right, there you go. Robin Hoodie, 130 on the day. Not too bad. Not too bad. 129.28 now, down about 2 or up about 2.4%. Do you think Hood can hit 150 end of year? I have no idea, bro. I have no freaking clue. I mean, if crypto does its thing, if S&P 7,000, I mean, is it crazy to say that? No, it's not crazy to say it, but I don't know. I really don't know. Amid, how many Hood shares do you have? Okay, let's do a poll. We haven't done a poll on this in a long time. Let's do a poll. Let's see what we have right here. So we know Josh has 250,000 shares of Hood. You can participate if you want to. If not, no worries. How many Hood shares do you have? Let's do 1,000, under 1,000, 5,000, and then 10K. Actually, no, this should be a bit. It should be 0 to 1,000. Then it should be 1,000 to 5,000. Then it should be 5,000 to 7,500. Then it should be 10K or more. 10K or more. That's the poll. That is the poll. Let's see. Let's see. Is anyone 250,000 degen into freaking Hood? 250,000 shares of this shit. I'm at 10K plus, guys. I'm at 10K plus. I'm not going to say the exact number, but it's over 10,000 shares. And so every dollar on this is a minimum of 10,000 added to the position. It's become a pretty big position, dude. And this is the one thing I did with Hood that I didn't do with Palantir is I bought into strength. No G in that. You know why there's no G in strength? Because I'm the G, okay? Because I'm the OG. That's why there's no G in my strengths. Okay? That I figured out. This is what I was looking for to explain why there's no G in strength. Because I'm the G. I'm the OG. But anyway. Yeah, I bought into strength for Hood. I bought into a lot of strength for Hood. So like, dude, 30, 40, 50, 60, 70. Like, I think my last buy was like 122. Like, I just did not care. At 120, I bought it, 116. And I should have done that on Palantir. I really should have, but I got afraid. I didn't, like, as much as I understood how valuable it is, I couldn't comprehend buying into strength. I just didn't have the experience of what it means to have a generational company and buy into strength. And with Hood, I didn't know if it would be a same generational type of play like Palantir, but it felt like it. And it was a gamble because what if it wasn't, right? What if Hood just like did not continue to move into strength? And then I would have just been bag holding a lot of those. But Vlad's execution has proven that they've been able to do it. So that's why I bought into strength. That was good, right? That was good. You got to admit, the G, that was good, bro. That, like, that, you got to give me that one. You got, for all the shit I get about these jokes, you've got to give me that one. I found the G, baby. I found the G. And it was me. Are you buying into strength now? Should we buy it at 130? I mean, that's what a DGen does, right? My last buy on Hood, 124.13. My last buy was 124.13. Last buy was 124.13. And the last buy before that was 115. And then the last buy before that was 98.97 that day before S&P. I mean, dude, at 130, I don't like, look, I've been able to see the growth curve ever since, 20, 30, 40, 50. At 130, do I still see the growth curve? Yes, but is it getting up there now? Yeah, I can admit it's getting up there now. Like, it has blown away all my targets. So if there was any moment where I would maybe not buy into strength, maybe it's here. Like, every time I bought into strength, I really didn't care. 115, 117, 97. Like, I genuinely was like, I don't care. Now at 130, I'm like, well, I don't know. Maybe you see how much strength it really has to keep going. Like, does anyone want to buy at 130 here? Like, I know people have been buying with me in strength, but at 130, like, do we really buy more? I don't know. It's a good problem to have, but still, maybe it takes a breather. There's no O in strength. No, I added the O for the G. Dude, that was good. I found the G. It's me. I found the G in strength. It's me. Come on, bro. That's good. The G is for grab. Yes, the G is also for grab. Doug said I'll buy a few shares. Oh my gosh, dude. What does the poll say? 84% of us are 0 to 1,000. All right. So 4% are 10,000 plus, 2% are 5,000 to 7,500, 9% are 1,000 to 5,000. So a decent amount of us have in that 1,000 share range of Hood, which is, dude, 1,000 shares is $130,000. 1,000 shares is $130,000 now. That was cringe. That was not cringe, bro. I found the G. I've been waiting for it. I've been waiting to find the G, and I figured it out. The reason I buy into strength without the G is because that's me. I should be a rapper, bro. I should be a rapper. No, guys, I don't know if this is the first time you hear the hesitation in my voice of buying at 130. Like, this is genuinely, and I can't hide it. Like, I would love to be bullish for the sake of being bullish, but this is the first time where I'm like, 130 is not something where I'm like, yes, I want to buy even 10 shares for the hell of it. Like, I don't know, dude. At 100, I had no problem. The day it hit 100, I posted a screenshot buying 100 shares. I was like, we're probably going past 100. If we hit 100, we're going higher. I don't know if 130 is where it tops out at, but it's not like I'm the most ecstatic to be. Now, I'm kind of like how some people are feeling with SoFi at 30. Like, well, we like it, but 30 is starting to get up there. Same thing for Hood. Like, grab at 628, no problem. I'd buy more at 628. Not that concerned. But Hood's up freaking how much year to date now? It's up year to date almost 230%. I mean, does this go for a 250% year? Do we have another 25%? Maybe. Jason said if we break above 130, we're likely going much higher from a TA perspective, which is fair. And I think fundamentally that also makes sense given I think Q3 is going to be good. But if we get any pullback in October that we haven't gotten for the past couple months or any little bit of sign of weakness, I mean, we know a lot of high beta names, including a SoFi, which has had a massive run, probably take a little bit of a pullback. And I think that's not crazy. So I tried to buy Hood, but I typed in hug. See that G, bro. Sometimes that G will get you. Sometimes it gets you. Would you exercise an $85 call for Hood? I personally would, because I want to hold this thing for like the next decade. But the profits on that $85 call might be well suited for you to just hold in cash or put somewhere else. But I mean, yeah, the like Hood going back below 100 is very possible. Going below 80 again, I think would be a bit tough. Like you would have to have a real serious decline. You would, you're talking about a 40, 50% decline. There would need to be a catalyst there. So I think 85 is not a horrible average to have on it. And I think that's fair. From a TA perspective, 140 is a good price target and then 172. Well, see, look, if Hood had Palantir's multiple, Palantir trades at, if I'm not wrong, 123 times price to sales. Hood is trading at 32. So if we take Hood's revenue, which is about 3.5, we multiply that by Palantir's multiple, Hood trades at $430. Now, look, I don't know if that's going to happen, but if it gets anywhere near Palantir's multiple, which it's still a good 80% away from, that could happen. Now, granted, should Hood have Palantir's multiple? I mean, look, probably not. All the qualitative elements are intact. The problem is Hood is a bit more cyclical. Now, granted, if we end up having a bull market for the next 4 or 5 years, that cyclicality argument goes to shit. There's no cyclicality. If we just don't have this, like, we're going to have pullbacks, but not this like massive bear market. So if you assume no massive bear market, if you assume their operating margins only get better, which is the beauty of Palantir, right? Their operating margins are above 40%. Hood's also at 40%. And you assume Vlad keeps executing. I mean, it's probably going higher. I don't know if it goes that higher, but it probably is going higher than here. Sam says from a Hood bull perspective, if we break 130, we're going to 2000. Okay, so maybe one day, but no, in all seriousness, like if you give it a little bit more of a multiple, if the bull market continues and I mean, they have 300 billion in AUC by the end of next year. That's probably going to be closer to 500 billion. In the next 2 years, that's going to be $1 trillion. They're bringing over accounts from every platform. They're going to be there's another AI event in December. Banking's not even out yet, dude. Banking, like direct deposits, that's one of the juiciest forms of capital inside of financial services. That's not even rolled out. I mean, there's a lot of things to be excited about. But we got to see if that momentum can continue. Which, honestly, I think it can. This is just the first time I felt actually a little not as excited to say, yep, I'm buying into strength. I also want to see a normalized 130. That would be nice. If your plan is to hold for decades and cycles are 100% going to happen, yeah, that's true. It's just, if people are asking a tactical question of, hey, would you buy or do you think there's upside from 130 in the coming years? It's like, if we don't have a bear market, there's a lot of upside from 130. Like, imagine Hood grows another 50% net. Imagine 2026 S&P is at like 8,500 and Hood grows another 50%. Like, this is a $200 stock. Like, if it has that much of a macro tailwind, it's going higher. But we have to see if that ends up playing out. Yeah, the basic question is, are people willing to give it a $200 billion valuation? And that could happen. Palantir doesn't have a JP Morgan, Fidelity, Vanguard, IBKR, and others are all doing what it does. Palantir has a product moat. Yeah, and I think that's the same for Hood. I think they have a legitimate product moat that's starting to lead to massive, massive amounts of user adoption. And that is the moat on their platform. Apple right there, 251, SMCI's at 47.29, Ethereum 4,200, and then Bitcoin 113. Dude, it's almost 12 p.m. Holy crap. It's almost 12 p.m. today. We've just seen these new all-time highs across the board. IREN, are we still at 49? We're at 47.80. That one chilling out. It would not surprise me if Hood chills out a little bit, but it did break through that 130 range. Yeah, that's another point, dude. They're not really in brokerage in Europe yet. They're only with crypto. I mean, they have their tokenized stuff now in Europe, but Singapore end of year, like India. Look, India's gonna be competitive, but if the Indians are degenerate, bro. There's 83 trillion options that are traded in India per year, contracts. It is ridiculous, bro. India is the #1 country for options trading, so like that would be a massive market for them to go after. A lot of this stuff just takes time, but question is if they can get there. Oh, Canada too, right? Yeah. Donovan, thanks for the $10 super chat. Congrats on 130. Love you, G. Dude, you guys got to admit, you got to give me some credit on the G joke. Can we make a poll for that? Can we make some poll for that? Do you give me credit for the G joke? Like I took a joke about strength. It wasn't really a joke. It was more so just you guys bullying me about that word for the past 3 days. And I turned it into what I would argue is one of the more intellectually savvy ways on the spot, off the dome, right? No ChatGPT in this, into an actual joke that coincided with an all-time high on one of our favorite stocks. Like if I don't get credit for that, y'all are just a bunch of haters. If I don't get credit for that, how is it 53%? No, what is going on, bro? Can we at least be honest? Can we be kind of honest? Yes, it was cringe, but still, if you have to do a poll for a joke to see if it was funny, okay. Look, I get that it seems like I'm begging for validation here, but like if I was an audience member and someone asked, I would objectively be like, yes, that was a good one. That was a good one. You want them to lie? No, I don't want anyone to lie. I want you guys to tell the truth. And the truth is that was a good joke. That was quite frankly, that was an exceptional joke. That was forget good. That was great. That was top 5. Like, that joke, those 30 seconds of that joke was better than 2.5 hours of Animal House. Dude, what did I watch last night? That was the worst movie I think I've ever seen in my entire. I mean, what is that, dude? What is that? It was so bad. It was so freaking bad. I dropped that joke in the chat 2 hours ago. You absorbed it through osmosis. Okay, maybe I subconsciously saw you talk about it, but I think that was decent. That was decent. You guys clip it, send it to I don't care, dude. Send it to whoever you want. That movie was unbelievably, goodness gracious, bro. Honestly, I think Dan was trolling, bro. I really do think he was trolling. I think when he said I'll block it, like the way he said it too was so funny. It's almost like he knew that I don't watch movies, and he was like for him to go out of his way to be like I would block anyone who hasn't watched it. To me, that was like absolutely a troll. It was rated R too. I thought it was going to be some branding. I mean, like there were some scenes that were like kind of interesting and exciting, but overall, I'm just like, what was the plot of the movie was not that exciting. Amit, can you be honest and stop purposely mispronouncing words? There is no way you pronounce the T in mortgage and no way you don't pronounce the G in strength. R. Yates, I deeply appreciate you watching the channel. I think although everyone voted no on my joke about my poll for the joke, I think everyone in the at least 95% of you can vouch for me that I am not doing this on purpose. If dude, it is not fun to mispronounce a new word every single day. Trust me. If I could speak normally, given I'm a competitive debater and I was top 7 in the country, top 3 in Europe, and everyone gives me shit for having a really good debate career and then not being able to speak. If I could do it without normally, I would. I promise you I'm not trolling or doing it on purpose to be funny. It's like the joke would have been boring by now if I was mispronouncing words as a skit. It really would be boring because it's been happening for 2.5 years. Like at some point, the joke gets old. This is every day a new thing that I have to deal with. So I really do wish it was on purpose, but it's not. Grab taking a bit of a hit right here, 1.74%, 621. Amazon 220, that goes red. And then Hoodie losing 130. We'll see by the end of the day if we get back there. Nvidia losing 180 as well, 178. And the S&P. Oh, wow, the S&P actually down. S&P, 1/3% is a move on the S&P. I'll see if there's any headlines. It might just be lunchtime dump. But you do have some red candles. You do have some red candles. Yeah, everything's taking a hit right here. Everything. How do you pronounce vodka? It's vodka. There's no way I'm saying vodka wrong, dude. If I'm saying vodka wrong, that'd be ridiculous. Oh, okay. I think I have the headline. U.S. Trade Representative and Commerce Department notice lists EU pharmaceuticals and aircraft parts among items exempted from 15% tariff under U.S.-EU trade agreement. Oh, this is actually good. This is not bad. This is stuff that's exempted. So that wouldn't be a reason. No, I think it's algos. I know people hate when I say it's algos because it's not the best reason, but like, I think it's algos. Grab 640 to 620. I mean, like that's not anything fundamental. SoFi, why is this thing stuck at 28 when it was at 30? Like that's not really reasonable. And then Tesla, I mean, Tesla's been riding high all week, but still 440 to 435. That one up about 2%. Say button. It's button. There's no way I'm saying button wrong. It's freaking button. Ointment. Dude, what are this like freaking third grade? We're just going to be saying words the whole time to see if I can talk. Like, it's not every freaking word I get wrong. It's just some of these words are weird. Like strength. Yeah, Amazon's still struggling. S&P 655 looking likely unless we get a bounce on 660. Well, we haven't touched 660 yet, right? Oh, no, we did. 660.95. Okay, so we touched it very briefly, but we were still just under 665. I agree. I mean, if we lose 660, we're probably heading lower, but we got to see if that's the case. Let's take a look at this. The energy secretary was on today. I mean, we've been talking about energy stocks all morning and them getting momentum. Let's get the Trump administration's take on energy and see how they're kind of overall thinking where the trend is going.
What are you thinking right now about what the new sort of configuration, given all the things that the administration is trying to do in terms of bringing back certain business to the U.S., what the energy requirements ultimately look like?
I guess in simple numbers, we think we need to add 100 gigawatts of new firm capacity in the next 5 years.
Bro, that's crazy. NVIDIA just did a deal for $100 billion for 10 gigawatts. He's talking about 10xing that, which would be $1 trillion. I mean, if the Trump administration is on board with 100 gigawatts of energy, that's probably why. I mean, this interview alone, this was at like 8 a.m. This interview was probably why some of these energy stocks really took off during the day.
Right. And when President Trump arrived in office, the plans and in queues was to close 100 gigawatts, mostly of coal, a little bit of natural gas, and only add 22 gigawatts of firm capacity. So a net reduction of about 80 gigawatts. So instead of minus 80, we got to go to plus 100.
President poured a lot of cold water on Climate Week yesterday, Mr. Secretary. I'm sorry to break that news to you. I think he
reduced greenhouse gas emissions. Also had technologies to monitor CO2 sequestration. Wow, if climate change is a huge deal, it's going to be great for my future business. But the more you dive into it, it's a very real physical phenomenon, but not remotely close to one of the world's biggest problems today. It's been used by politicians and activists to claim it is, call it a crisis, but that's simply divorced from the reality of the data.
I mean, some of the findings, it was in this piece in the Journal, the op-ed piece from Obama's guy, Steve Koonin. Complex climate models provide limited guidance.
Space. Look, I'm a tech nerd, science guy my entire life. And we commissioned that report, and I've been out talking about climate change based on data and facts. Just like everything in life, it's about trade-offs.
Well, that's what I was going to ask you about. Let's just talk about the trade-offs. I think that's the, by the way, I agree with you. It's a trade-off story. And the question is, we need a certain amount of energy to be able to grow our economy and do all the things we need to do. The question is, do you believe 20, 30, 40, 50 years, I don't know, hopefully we can live a very long time, that from a science perspective, we're going to care about CO2? Meaning, you may...
It's so interesting they're asking about climate change. Dude, whatever you politically or scientifically believe about climate change, I don't care. Objectively, we can all agree on. The Trump administration doesn't even kind of think of climate change as an issue. Not even for a millisecond has Trump probably thought about, oh, well, the energy trade-off and climate change. No, the Harris administration would have thought about that, the Biden administration, but Trump does not care. So asking Trump's energy secretary about climate change as a trade-off for energy infrastructure, I mean, the answer is going to be, we don't care. They're not worried about what's going to happen in the next 40 years. They're worried about economic mobility and energy being a massive tailwind for GDP growth via all this demand from AI. But climate change is not going to be the concern for these guys.
You say to yourself, right now, given the trade-offs, you need coal or you need fossil fuel, whatever, right? I'm with you. Yep. I'm with you there. However, there could be a time, I think I guess the question is, in a perfect world, would you try to use energy sources that don't create the CO2 issue?
Oh, I think so. Absolutely. Yeah.
I don't think so.
We can eventually decarbonize the world, but that's generations away.
And decarbonize the world through technology?
Absolutely, through technology.
Just if you're arguing that there's no discernible effect, why would you, if it's a phantom menace in your view right now, then why give credence to the idea that you want to, that whole word decarbonize it? We're at 0.04% CO2. It's been 20 times higher.
Okay, getting into debate about climate change. I think if you have the energy secretary on from Trump's administration, asking him about climate change it's not relevant to them. They don't care in it. They don't believe in it. That's not going to be their stance. What matters is how much they're willing to create the regulatory frameworks that are friendly to the energy companies that need new regulations on zoning, new regulations on data center build out, which, by the way, big, beautiful bill, if you read through some parts of it, very, very friendly to data center build out, particularly in towns and municipalities that have advocated to go against data centers. The big, beautiful bill kind of just says, nope, AI is more important. We need more energy. And the hyperscalers have the ability to benefit from it. So yeah, I don't think climate change is going to be the issue. S&P 500 right there, down about almost 0.5% on the day. I don't have the headline for that, but you are seeing a grind down towards potentially below 660. But I think that interview could have been the reason why a lot of these names pumped in the morning. IREN right there, still up 13% on the day. And yeah, that's the other thing. Nuclear should be cheaper and cleaner if they're going to embrace any level of green energy. And so one could make the argument that if they embrace nuclear energy, that is actually the best way for them to decarbonize. I don't know, dude. For us to fully decarbonize in the next 20, 30 years, I know every company has their stated goal. I think at the end of the day, companies do not care about climate change. They care about shareholder profits and shareholder returns. They care about free cash flow. They don't care that much about climate change. And until you have an administration that really stuffs it down their throat to care about it, they're not going to care. It's not going to be economically viable. Now, maybe that screws us in 50 years if the whole world falls apart because of some cataclysmic catastrophe of climate change, maybe. But just the harsh reality is this administration does not care about that. Palantir right here down about 2.5, Nvidia down 1.2, S&P. All right, let's see if she gives up 660. Let's see if she gives up 660. If she does, maybe we're going to have some pain. Yes, nuclear is not cheaper, though. That is fair. It should be cleaner. And maybe if you get economies of scale, it does get cheaper. Obviously, oil and gas, coal, given we just have so much of it and we've already built so many facilities for it, is the easiest for us to keep engaging in. But drill, baby, drill is the mentality of this administration. It's not don't drill enough because we're afraid of climate change. That's just not been their stance. S&P, all right, 15 cents away. Let's see if it breaks 660. Elizabeth Warren calls to investigate President Trump's family over foreign crypto deals. Okay. I guess we're going to see how that plays out. I mean, Warren's been trying to do this for a long time now, so it looks like she's making it official. There are a lot of crypto deals in the Trump. There's like 15 different angles at how they're playing crypto. Not to mention DJT, dude. Have we even freaking DJT? We haven't looked at this in so long. That's down 2%. Now, will our investigation lead to anything? I don't know, because obviously Trump controls the SEC, the White House, etc. DJT down 50% this year. But they do have a ton of different crypto deals in place. BMNR, that one's back down to 53.50. Hoodie is trying to hold 128. Grab potentially going below 620, down 2%. And then NVIDIA, 176. Tesla somehow holding on. Tesla holding on. S&P did not give up 660 yet. Low was 660.15. Did not give that away. At least not yet. All right. Looks like it's going to be at least a red lunchtime. I mean, we'll see on the market close if this pivots, but it looks like we're red. And again, it's not some crazy sell-off. It's S&P's down 0.5%. Just like yesterday, though. But yesterday it would recover throughout the end of the day. And now it's kind of doing the same thing. So, and I don't see a quote from Jay Powell like it was the catalyst yesterday to cause this. It really genuinely just does feel like algos. The housing data was good. I don't think that would be the reason why. It could just be a strong September with a little bit of weakness as we head to the end of the day or the end of the month. North Caribbean down 1.8%. It started G coin. What do you think about the Fermi IPO? I have not looked into them, but they're in energy. And so, I mean, that in and of itself is probably getting a lot of people excited. So I would imagine there's going to be demand for that IPO. All right. Is that it, guys? Is that it? Amazon, are we getting this bad boy below 200? Amazon 219. There she goes. Grab below 620. All right, so everyone's getting a little bit of a hit. We'll be back on the close to see if this can recover. If not, it is what it is. Like, it is what it is. It's been a good month. Sometimes you got to give back some of the gains. Rocket Lab, this one I don't know why it's just been going up and down 7-8% every day. CoreWeave down 2, and then Coinbase up a little bit. And then Hoodie 128. Yeah, a little bit of a healthy pullback. I mean, I know it's so cliche, but a little bit of a healthy pullback. The cool thing is breaking some of these levels. Like IREN breaking 49, that matters. Robinhood breaking 130, that matters. The fact that there's buyers there willing to like bid is so important. And that likely means there's more demand coming in if they ever get back to those levels, which, you know, they probably can get if there's already buyers that were there. So not too crazy. Not too crazy. All right. I think that's it, folks. We're done for now. We'll be back on the close. Word of the day. What do we got? Another word for me to mispronounce. This looks like a French word. Bon mot. Bon mot. There's no way this could be wrong. There's a freaking T at the end. Bon mot. Bon or bon mote, maybe bon mote. Bon mote or bon mot. I'm going to get 2 on this.
Bon mo. Bon mo.
Why is there a T if it's silent? Like, genuinely, I'm not even like I'm not trying to be funny. Why isn't it just bon mo without the T? Like, why isn't it like that? Why is there a, like, this is like, why is there like, the G shouldn't be in strength. The T shouldn't be in bon mo, but they just, a witty remark or comment, clever saying. Of course, this is a witty remark. Her bon mot about the movie star's red carpet style went viral. The interview was full of clever insights and the occasional bon mot. Dude, has anyone even used this word before? Bon mot? Oh, wow. Yeah, he had a very witty remark. He had a very bon mot. Like, what? Of course, it's French. So do the French just not pronounce their T's? Mot is related to the word motto. Okay, so you pronounce it mo in French, but it gets to the word motto in English, which has two T's. You can very easily pronounce the T in that one. But in the French version of this, there's no T. Bon mot. Okay, it is. It is what it is, bro. You guys know better than me. You guys know language better than me. I'm at work laughing my ass off. I mean, I don't know. Like, I'm happy that this is entertaining for people, but like, it's not a skit, bro. It's not a joke. Like, there's a freaking T on the bon mot, and they turn it into bon mot.
Bon mot.
Like, it makes me want to study French because, like, every day we get a new French word, and apparently you pronounce it in some obscure way. And I guess I need to learn this stuff. Does anyone actually use this word, bon mot? Like, who? I've never heard of this shit. I've never heard of this shit. This is like, this is ridiculous, bro. But whatever. That's the word of the day. Bon mot. I think I'll remember that. I usually forget every word. I will remember this one. Bon mot. Clever or witty. S&P, oh my, 2 cents away from below 660. 2 cents away from below 660. Well, I would say my G joke today was very bon mot. That definitely, if we're talking about witty and clever, we got it. That's definitely a bon mot. It's definitely a bon mot. All right, so it bounced off 660.02. As you can see, there's buyers stepping in right at that low 660. It's not easily giving it up. If it does, then maybe we have 555 to look out for. Which S&P so far for the month, again, we got a couple days left. On the 1st of September, we were at 640. We're at 660 right here. So if we go to 655, right now we're up 3%. 655 would put us at 2.3%. That's not crazy at all. But we still have a couple days. Still have a couple days to see how this plays out. October 1st is... Oh, no. Actually, we have 2 more days of trading next week. Next week, September 29th and 30th. So we still have 2 more days of trading. And then October 1st starts on Wednesday. Okay, so midweek next week, we're going to see how we get into October. NVIDIA, 175. Robinhood's still kind of holding on green. I know we broke 130, but we're holding on to some of the green grab. Kind of just getting wrecked today, down about 2%. NVIDIA down 1.5. Tesla still holding up. Palantir down 2.6. And then the S&P trying to hold 660. All right, folks, that's it. I'll be back on the close. Thank you all for being here. I hope everyone has a great day, even if that day doesn't end with momentum into strength for the market. But hope everyone gets some lunch, gets some food. We'll be back in a couple hours, and we'll keep going from there. Dude has been yapping for 3.4 hours. Dude has been yapping for 3.5 hours and mispronouncing for 3.5 hours as well. But that's what we do every day. All right. Thank you, everybody. Appreciate it. We'll be back on the market close and keep going from there. Thank you, everybody. See you in a bit.